today. So we'll see if they can cement Republican control of the legislature or not. And we want to add a voice to this conversation now. I'm very pleased to say joining us is the former governor of Virginia, also a Republican, Jim Gilmore. He also served as the U.S. ambassador to the Organization for Security and Cooperation in Europe and was the chair of the RNC for a brief period of time. So, Governor, thank you very much for joining us on the program today. How do you think this shakes out in Virginia? You think the Republicans can do it?
Well, yes. We don't know yet because this is a brand new election. This is right after a redistricting, so all the districts are scrambled up. The candidates are relatively new, some of them. So we just don't know how this is going to work out yet. The issues, of course, have been fully argued out for quite a long time. Governor Youngkin has done a significant amount of fundraising and has been very vigorous in his support of the Republican tickets. But on the other hand, the Democrats nationally, I think, have poured a tremendous amount of money. The environmental community, particularly the business leaders in the environmental community, have poured a ton of money into the Democrats. So we just don't know yet how this is going to shake out tonight.
Governor, when you mentioned the issues have been argued, some election cycles are very much focused on an issue. We've had election cycles that felt like they were on the Dobbs ruling. We've had Obamacare election cycles. Is there an issue that Virginians feel they are effectively voting on, or is it less clear this time?
No, I think it's been very widely publicized on purchased television advertising, and the principal issue has been abortion. The Democrats have decided that abortion is their strong suit. They're throwing a lot of television commercials against the Republican candidates, claiming that they want to ban abortion, which is factually not true. But nonetheless, you put it on radio and TV. The Republicans are actually chose to meet that argument. And instead of avoiding the abortion issue, they're actually addressing it and talking about the governor's proposal to ban abortions after 15 weeks with reasonable exceptions. But that is what has been argued out. Now, I would say that the people of Virginia are very concerned about high inflation. The cost of the grocery store, the cost of gasoline are very significant, and I think has led to some discontent in Virginia. But that has not been the primary debate within these elections.
Well, and of course, we talk about these elections because they will have significance for the state. But to what Jack was discussing earlier, this potentially could be of national significance if indeed it puts some momentum behind Governor Glenn Youngkin if he were to ever pursue higher office, especially as you yourself went from being governor of Virginia to multiple times entering the presidential race. Do you see a path for Glenn Youngkin to do the same?
Well, certainly, while I was not nominated during these Trump years, I'm very proud that I entered, and I have no regrets for entering. It's a wonderful thing to run nationally and get to know everybody across the entire country when you're a candidate. Glenn Youngkin has a lot of advantages. The biggest advantage, of course, is he's a prominent governor of the state of Virginia, and he's quite wealthy, and he has a lot of financial backing. And he has a message, and his message that got him elected, and his message remains parental rights, particularly in education. I think people are very concerned about the Democrats' efforts to remake education, to remake the cultural issues here in the United States. Parents just want their kids to be educated, and they basically had a sort of a rebellion in Virginia against the far left approach to education, and that's why Glenn Youngkin got elected. So all of these things are very current. I don't know whether or not he's in a position to go in 24 or not. He'll have to make that decision. But he's an attractive, prominent man and could still run in 28.
Governor, I know I've said I'm a little skeptical that 2023 tells us something about what happens in 2024, but I am curious if you see this as a bellwether for congressional races, or should members of Congress be looking at the map that comes out of these election results? Do we have anything to learn from the results that come out looking forward to 2024?
Jack, I think you learn something every year about politics in Virginia. We're an unusual state, and we have an election every year. There's historical grounds and reasons for that, but we elect somebody either at the federal level or the state level every year, either the governor or the presidency or just the legislature like we have this year. And yes, I think you learn a lot. Naturally, politics and issues shift in the United States of America from year to year. I myself have been devoting my attention to foreign policy as the former ambassador, and particularly the Ukraine issue. In fact, I sent a letter yesterday to the Republican members of the House of Representatives here in Virginia, insisting that they be sure that they vote for the funding of Ukraine. So I'm doing that, and that issue may shift into the federal elections next year. In fact, I think it would. The foreign policy is certainly emerging between the Ukraine issue, which I think is the hinge of the future, and the Israeli issue, which of course we're all very engaged in. So foreign policy is emerging, but it won't be the only thing next year, either in the House races or in the presidential races.
Well, to that point, Governor, when you were talking about really what you think is on Virginians' minds as they head to the polls today, you mentioned two things, really, inflation and abortion, both of which seem like internal facing issues to me, more domestic affairs than international. Do you really think that's going to change in a material way in the span of a year, considering there may be a little bit more fatigue setting in terms of some of those conflicts you just mentioned?
This is the most disrupted time I have ever seen in my life in American politics. I've never seen anything quite like this. So you can't predict what's going to happen, but I'll do my best I can. I think that the issue of abortion is going to continue to be a debate because I think the Democrats want it to be a debate, and they want that to be the principal issue. I think inflation remains a problem. There's no doubt that the people of the United States and the people of Virginia are blaming President Biden, correctly in my view, for this inflation that they're seeing at the grocery store and the gas pump. And I think that pocketbook issues are always an issue. But I insist to you that the foreign policy issues, the issues of war and peace are emerging very strongly. We always say, that foreign policy and national security is never an issue in elections until it is. And I think maybe it is growing that way right now.
Governor, I've got to follow up on your point on Ukraine aid in particular. As I speak to members of Congress, I see a big difference between Republicans in the House and Senate on how they want to move forward or if they want to move forward with Ukraine aid. There's a really interesting intra-party divide there, especially given your foreign policy expertise and your time as RNC chairman. I have to just ask you your view on a simple question of what is the Republican position on Ukraine aid right now?
The Republican Party is divided, but all the noise and attention is being given to the anti-Ukraine group. But I believe they are a vocal minority. The majority of the Republican Party remains committed to Reagan type of foreign policy and national security. The Democrats traditionally have not been that way, but they are that way now because they're so supportive of President Biden. But my view is that President Biden needs to do a great deal more. He's done too little, too late. And I think that there is an aggressive need to fund the Ukrainian war. As a matter of fact, damage has already been done by this debate in the United States because it makes our allies and our allies less certain and our adversaries more enthusiastic because of this division. But I believe that at the end of the day, the Republican Party will, in a strong majority, vote for the support of Ukraine.
Governor, I should ask about timing. I heard from Senator Chris Murphy yesterday, who's involved in these negotiations, that they really want Ukraine aid to go on a funding package that has to happen by November 17th. There are so many convoluted issues they're negotiating tied to Ukraine. How much longer can Congress wait to send additional aid before it really, really undermines Ukraine?
Well, I don't think that the undermining Ukraine financially is imminent. I think that it's most important about the messaging. Right now, Vladimir Putin and his allies are looking to American resolve. They want to see whether Americans will quit. They want to see whether Americans will become either bored or frustrated or distracted by other issues, particularly the Israeli war. That's what they're looking for, to see whether American resolve will crack. If America stays solid, and I believe they should, and my letter, which went to the Virginia congressman, will, of course, be published nationally also. I believe that as long as we stay resolved, we're going to be fine in Europe and probably fine in Israel. But these elections right now, of course, in Virginia are turning on domestic issues. You would expect that. This is a state legislature. But next year, when the Congress is up and the president is up, then I think you'll see all kinds of issues: education, inflation, jobs, and foreign policy and war and peace. I think all of that will be on the agenda for next year.
Okay, so Governor, let's talk more about that presidential race, specifically the Republican primary race, because all of our attention will be on Miami tomorrow, the third primary debate in which, once again, the frontrunner, former President Donald Trump, will not be making an appearance. And especially considering your former position as chair of the RNC, Why are we still doing these if he's not showing up? What's the point?
Well, they're an exposure of the other candidates, and I think that what's going on is somewhat unpredictable. I think actually there's a lot of truths that you can figure out here, in my opinion. Number one, President Trump is far and away the choice of the Republican Party right now, and you can't change that. All the polls are perfectly consistent. Even into the states, they're consistent. Now, it doesn't mean that President Trump is necessarily going to win. It's pretty much close or a tie. But President Trump is showing winning in many of the swing states. These debates, though, give other candidates an opportunity to go out there and expose what they believe is right, because after all, these races are quite unpredictable, and these attacks on President Trump in the courts are unpredictable. There's still time to do these things. I might say I participated, I think, in 2 or 3 of the national debates, and they're a great service to the people in the community because they give the public an opportunity to take a feel for not only the candidates, but for what topics they're addressing. So I think it's healthy for the United States. I'm not sure that I agree with everything the RNC does or says right now, but the debates, people want to be on them because they do give national exposure.
Does that mean that someone who does a good job in these debates is the actual alternative to Trump? Do you see a valid person competing with Trump, or is it exposure for future races for a VP nomination or something else?
Right now, there's no evidence that any of the other candidates running for president are able to overcome President Trump. And I think maybe there's something I need to say to you about this. I watched the Democrats, particularly on national television shows, on the Sunday shows, and they seem to be puzzled about Donald Trump. I think I understand this. And what I understand is this: the far left in this country has taken over the Democratic Party and is actually aggressively assaulting the society today on education issues, on various and sundry cultural issues in this country. And the the Republican Party rank and file are frightened. They feel attacked. And as a result, they're going to choose a leader who they think will fight for them. And that person is Donald Trump. And I think that's what's going on right now. If the Democrats were more mainstream, there might never be a Donald Trump, but the Democrats are not mainstream.
All right, we really appreciate you sharing your thoughts with us today. That's former Virginia Governor Jim Gilmore, of course, also former chair of the RNC and former U.S. ambassador to the Organization for Security and Cooperation in Europe. We really appreciate your time on this election day. And of course, before we can get to 2024, Jack, we have to get through today when it's not just Virginians heading to the polls. Ohio, abortion's on the ballot. There's a few gubernatorial races as well that could send some pretty strong signals on where exactly voters are.
Yeah, especially with an eye on the national repercussions. I am very interested in the Ohio results. It's not a true swing state right now, but the question of how motivating abortion access is, that will matter a lot in 2024.
Yeah, will we see people showing up to vote on issue 1 in the same way we saw turnout really driven in the immediate aftermath of Roe versus Wade? We certainly saw that in the midterms last year, but we'll see how much that remains as a force. We're going to have much more coming up on this second hour of Sound On, so make sure you stick with us. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. 7 in a row for the S&P 500 index. A rally in big tech has put stocks on pace for their longest winning run in 2 years as investors shrug off the latest attempts from Fed speakers to tone down Wall Street's dovish bid. We've got the 10-year yielding 4.55% with a 2-year right now at 4.89%. The Dow, the S&P, NASDAQ all higher. S&P up 18, up 0.4%. The Dow up 68, up 0.2%. The NASDAQ Composite Index up 150, a gain of 1.1%. The rally, though, is not broad-based. The Russell 2000 Index of small-cap shares is lower by 0.3%. Spot gold down $10 the ounce to $19.68, drop there of 0.5%. West Texas Intermediate crude down 3.9% right now, down $3.13 a barrel to $77.68 on WTI. In a rare move, our Mark Gurman is reporting that Apple has hit pause on development of next year's software updates for the iPhone, iPad, Mac, and other devices so it can root out glitches in the code. We've got Apple shares higher now by 1.7%. Again, recapping, stocks are higher. S&P up 18, up now by 0.4%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
You're listening to Bloomberg Sound On with Joe Matthew and Kaylee Lines on Bloomberg Radio.
Welcome back to the fastest show in politics. It is Joe, not today. Jack is today joining me. I'm Kaylee Lines. And Jack, of course, you usually spend the vast majority of your time on Capitol Hill. And we should keep in mind that we are now, 10 days?
10 days.
To the deadline?
10 and a half.
10 and a half. Okay, being generous.
Yeah.
They need all the time they can get to keep this government funded and not shut down come November 18th. And we're getting some news, not necessarily on what form the continuing resolution is going to take, if one, Jack, but instead from the Senate side about a supplemental. Senate Minority Leader Mitch McConnell apparently talked to President Biden and Treasury Secretary Janet Yellen about that yesterday. And he says that you need a credible border solution in that bill.
Yeah, so what they mean by credible is not just money. The president asked Congress for more money for the Department of Homeland Security for border needs, but the response from Republicans has been, if you want to get Ukraine money, politically you need to attach something, quote-unquote, credible on the border, and that means policy changes. That means restrictions on people's ability to come in and stay in the U.S. if they're seeking asylum, effectively that kind of thing. So that opens up a big can of worms because it's not easy to do immigration reform and get into all of those policies in a week and a half. And the conversation is about tying that to a stopgap measure. We don't know if the House will go along with that, but it as I said, opens up a big can of worms if they're trying to legislate on all of these issues.
Yeah, I would imagine just the bigger it gets, the harder it gets, and we're quickly running out of time. I also have to wonder, given that immigration reform and the border is such a big topic on the Hill, if that really is something that is going to drive voters when they're heading to the polls. We just had a great conversation with the former governor of Virginia, Jim Gilmore, who says he really thinks voters right now are voting on abortion and they're voting on the economy and on inflation. And on that note, I was really struck by a new survey from Ipsos and Yahoo Finance about the economy and specifically President Biden's job with the economy. 17% of those responding in the survey said policies have helped them. 46% said Biden's policies have hurt them. That's not looking great for the man currently sitting in the Oval Office, Jack.
It's looking rough. It makes sense why there are non-economy focused issues that Democrats are pushing hard for. And they did have success in the 2022 midterms in terms of not losing too many House seats to Republicans in a tough year, with a lot of people running on abortion access and making that a big focus.
So it worked in 2022. The question is it going to work again today as people head to the polls and then again in 2024? So let's get more on this now. Joining us is Cliff Young. He's president of U.S. Public Affairs at Ipsos. So, Cliff, just talk to us more about the data you are seeing. How much trouble does it really spell for Biden and potentially Democratic hopefuls and incumbents more broadly?
Well, we're still pretty far off from the election. We're more than a year, right? And so we have to take that with a bit of grain of salt, any sort of data we see today. But that said, Biden is a historically weak incumbent. We have him at 39% approval rating, which is at the tipping point. It's about 40%. That's the tipping point for a sitting president having better than a 50-50 chance of winning the next election. We know that he's not connecting with voters on the economy, and it is the economy, and more specifically, inflation. And to date, the administration has not been able to make that, bridge that gap, make that connection. And really, voters at this point are really surly when it comes to the economy.
Cliff, when you mention that mark of being under 40% for an incumbent and the bad news that is for their chances of reelection, there is time. There's about a year until Election Day. Is 39% so low that historically that is very, very bad news, even with a year left? Or what should we keep in mind with the runway that President Biden has to try to slow the rate of inflation and win people over on the economy?
Well, 39% is not a death sentence. It's about 49% chance of winning. So that's not, you're not out of the game, right? We have a year. The economy could change. So the contextual variables could change, driving up the numbers. And we know that incumbents do pretty well during the campaigns. So what happens ultimately is that the administration, in this case, Biden's administration, will hammer home the sort of accomplishments during the campaign, communicate that. So typically approval ratings improve, during that period of the electoral cycle. But once again, he's not in a good place today.
Yeah, on the economy, especially as you've been outlining, Cliff. What about some of these other issues that we were just hearing from former Virginia Governor Jim Gilmore? He thinks Democrats are really trying to focus on, maybe because of the weakness on the economy issue, like abortion. Is that going to be the same kind of galvanizing force that it had been in the immediate aftermath or more immediate aftermath of the overturning of Roe? What does your polling suggest?
Well, at the national level for president, I think it's going to be the economy, unless some other issue comes to the fore. I think the down ballot races and the state races and more local races, the abortion issue is going to be important in deciding outcomes. So I do agree there. The other point I wanted to make, and you made this point at the beginning about the border, the number one issue among Republicans today is immigration. And so while it might not galvanize Americans in general, it definitely energizes the Republican base and makes a complete sense, the initiative today in Congress to have that as some sort of a demand in any sort of deal.
How does that compare? As you said, it makes sense to tie something on the border to Ukraine funding. What do we know about the enthusiasm of skeptics or opponents of Ukraine aid? We talked to Governor Gilmore about where exactly the Republican Party comes down on Ukraine aid. It's a bit of a complicated answer, but I mean, is that enough to win people over, or are Republicans really moving away from foreign aid to Ukraine?
Well, at this point, Americans in general are more isolationist than they were a generation ago, and Republicans especially so. That said, I wouldn't say it's a galvanizing issue. Immigration, in my mind, for Republicans, is key, but definitely on the margins. It is. It is a change, right? It is a change relative to a generation and a half ago. It goes towards the Israel conflict as well, and Gaza. Now, it's not much as Republicans, more Democrats, but the younger generation is less interventionist than older generations.
So just to expand on the idea of public sentiment around Israel and its war with Hamas, it feels like there is more pressure, especially in certain portions of the Democratic Party, for humanitarian considerations to begin trumping that of Israel's objectives in trouncing Hamas. Is that reflected in public sentiment? Is there a shift underway in terms of support for Israel?
Yeah, so in general, just Americans in general, there's about 87% of Americans are in favor of humanitarian aid and relief. So that's not something that varies that much from party to party. I would say there is a pro-Palestinian or maybe more of an agnostic bent in the Democratic Party today, and that's especially among younger voters. The younger generation has less, I would say, linkage, less relationship with the issues in the Middle East compared to a generation or two ago. And that definitely is manifesting itself today in public opinion.
All right, really fascinating stuff. We always appreciate you joining us and your insights and your great data. Cliff Young, the president of U.S. Public Affairs at Ipsos, thank you very much. And Jack, it just kind of returns us to this calculus. So if you're thinking about the mind of a voter, where really some of these internationally oriented issues are going to rank when they go to the ballot box and are thinking about what's going on at their kitchen table.
Yeah, well, I find it really interesting, the point that the border is so much more of a motivating issue for conservatives, that maybe this whole negotiation in Congress where Republicans are saying, if we're going to do Ukraine, we need border stuff, isn't so much opposition to Ukraine, but just an opportunity for them to get a win that their voters will help them on. I found that very, very interesting.
Yeah, maybe just a chance to use leverage while you have it, right? Because again, the clock is ticking. And
10 days.
Ticking louder and ticking faster. Again, Mitch McConnell, the Senate Minority Leader, says that there needs to be a credible border solution in a supplemental spending bill. We'll see if they can kind of coalesce around what exactly that solution is in the next 10 days. We're all waiting and watching for that. Of course, we're also waiting for Nancy Lyons with a check on world and national news. She's here in the Bloomberg 99.1 newsroom in Washington. Hey, Nancy.
Thanks, Kaylee. Today marks 1 month since Hamas launched a surprise attack on Israel. Israelis sang the national anthem in Tel Aviv to mark the moment. National Security Council spokesman John Kirby addressed the milestone while briefing reporters this afternoon.
1 month in, it's good for everybody to take a knee, take a pause, and remember the scope of the suffering here and the terrible images many of us have seen coming out of both Israel and Gaza.
Kirby says at least 400 U.S. citizens and their families have made it out of Gaza, with 96 exiting in the last 24 hours. He also said nearly 600 trucks filled with humanitarian aid have made it through the Rafah border crossing since the fighting began, describing that as just a trickle. The Supreme Court is considering a case centered on a gun law that prohibits gun ownership for those under a domestic violence restraining order. Bloomberg's Irv Chapman has more on today's arguments before the court.
The government's lawyer, Elizabeth Perloger, supported the law denying the right to a gun to a Texas man who used a gun to threaten his girlfriends.
All too often, the only difference between a battered woman and a dead woman is the presence of a gun.
Amarillo, Texas lawyer Michael Wright said domestic violence restraining orders are too easy to get.
A one-sided proceeding that is short, a complete proxy for a total denial of a fundamental and individual constitutional right.
History and tradition was cited by both in support of their positions. In Washington, Irv Chapman, Bloomberg Radio.
U.S. News and World Report is out with its rankings of best places to retire. Harrisburg, Pennsylvania tops the list. The other cities in the top 5 are also all in Pennsylvania: Reading, Lancaster, Scranton, and Allentown. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We begin with crude oil. West Texas Intermediate crude down 4.2%, 77.42 for a barrel of WTI. Oil is falling on China trade data, along with Fed comments about demand outlook. The Dow, the S&P, NASDAQ all higher. The Russell 2000 index of small cap shares is lower. The Russell down 65 points, a drop now of 0.5%. S&P higher by 15, up by about 0.4%. Dow Jones Industrial Average up 51, up 0.1%, while the NASDAQ Composite Index is up 147 points, up now by 1.1%. A rally in big tech puts stocks on pace for their longest winning run in 2 years, 7 up days in a row. 10-year yield 4.55%, the 2-year 4.90%. Gold down $10 the ounce, lower now by 0.5%. It is not time to declare victory on inflation just yet. That's what we're hearing from Minneapolis Fed President Neil Kashkari, though he says central bankers are getting there.
Core PCE on a 3-month basis is running about 2.5%. And it's lower than the 6-month data. It's lower than the 1-year data. So that suggests that the disinflation is real. If we continue to see inflation numbers of that range, 2.5% or lower on a go-forward basis, that would tell me, okay, we are now on a path back to 2% inflation. But 3 months data is still only 3 months data. And if we see that start to tick back up again, that would tell me our job is not yet done.
Kashkari was the guest this morning on Bloomberg Surveillance. D.R. Horton reported worse than expected quarterly orders as soaring mortgage rates hit demand, and Datadog shares are soaring after the cloud software company reported third-quarter results that beat expectations. It also raised its full-year forecast. Datadog, DDOG on the ticker, up now by 28.8%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
You're listening to Bloomberg Sound On with Joe Matthew and Kaylee Lines on Bloomberg Radio.
Welcome back to the fastest show in politics. It's Kaylee Lines alongside Jack Fitzpatrick today as Joe Matthew takes a well-deserved day off on a day which, as we've established, Jack, it's an election. It's 10 days out from a government shutdown, potentially, or at least the deadline to avert it. We should clarify that.
Very, very big to solve all the problems.
Yes. But this day is also special for another reason. Do you know what it is?
I start listening to podcasts again. Are we getting there?
A new podcast from Bloomberg, Elon Inc. It's launching today. It's a weekly new chat show hosted by David Papadopoulos, who is an executive editor for markets coverage, and a panel of other guests who are basically just going to break down the most important stories related to Elon Musk and his empire and all that he is. And we know that he is a lot, Jack.
A lot there.
So let's have David Papadopoulos join us now. Really looking forward to this, David. Thanks so much for being with us. Can you just tell us what this is all about? Is it primarily about the man himself or about his businesses, or can you even really separate those two things?
Well, hey, thanks for having me on. Yeah, no, it definitely is hard to separate those things. I would say it's a little bit about all of them. What we do know is that Elon Musk is the industrialist of our time, right? He's not the world's richest man for nothing. He's created this constellation of very powerful companies in some of the most cutting-edge industries out there. He's also, as we all know, Kaylee, a very controversial character, very polarizing.
Yes.
And you know what the show seeks to do. And listen, I'm the host. I'm kind of an Elon ignoramus. I don't know that much about him. Actually, Walter Isaacson's new book was very helpful for me to get up to speed. But the Muskologists, as we call them, our Muskologists, Dana Hull, who's been covering Tesla for many years, Max Chafkin at Business Week, Sarah Fryer, who helps oversee our coverage of Silicon Valley, and so the whole Twitter X story she's been on top of, and a rotating group of other guests. They're going to be the ones who are going to really break it down for our audience week to week and help them parse and understand what's going on. I mean, the cycle, the Elon news cycle is so ferocious that whatever you record, you have to get out really quickly.
I would imagine so.
Yeah.
David, when I heard there was going to be this Elon Musk podcast, the first question in my mind was, where do you start? Is it Tesla, Starlink, Twitter, colonizing Mars? I understand you're starting with Neuralink. Is that right?
Well, so we're starting with both Neuralink and with AI, XAI, which is a small part of his empire. The Neuralink piece, which ties with a story that ran on that will run this week in the cover of Business Week by Ashley Vance, looks at how the company, which seeks to put implants in human brains, in people's brains, and help them, for instance, help the paralyzed start to walk, help eventually the aspirations at some point help the blind see, so on and so forth. That has indeed been FDA approved. They're going to start soon looking for people willing to have these implants put in their brains, and we'll go from there. I mean, of course, Elon has got much more fanciful visions for the company down the road. I mean, at some point in his mind, it's going to work something like, the way it worked in the Matrix, right? We're going to have information downloaded into our brains.
Well, David, for the sake of science or for the sake of the podcast, would you sign up to get a Neuralink chip in your brain?
Well, wait a minute. You're asking, this is a question I asked when the episode comes out. So I said to them, again, I'm just you can't ask the host questions. I'm just the host. But I did I did say to them.
So that's a no then.
Well, no, you'll see how they. I mean, listen. The way they answered it to me was this: like, if you indeed are paralyzed and you hope to walk again, you very well may. Obviously there are risks. Obviously there are scary, scary things. I mean, to be clear, it's not even a human who puts this thing in your brain. It is a robot. A robot will be placing this in your head because a human doctor is incapable of executing with the kind of precision needed to get this safely in your brain. But for those who have lost hope of ever walking again I could see it for sure.
David, I have a liberal artsy question for you. When you used the phrase the industrialist of our time, and I think of other industrialists of other eras, and if I think of the name Carnegie or Ford, I see their influence going far beyond their productive investments, beyond technology, and entering into political spheres, cultural spheres. And obviously with Elon Musk, we can get into Twitter or X. We can get into the Starlink Ukraine questions. But broadly, how do you approach the political and cultural influence of Elon Musk? How do you even begin to get into that?
Well, I'll just say it's just something that's going to play a very large part in the show week to week because it becomes, as you're suggesting, very, very difficult to separate Elon Musk and his business empire with his political leanings, with his views on speech and on free speech and on all sorts of different issues. He's always been a libertarian of sorts. That's always been a guiding principle of his. He did somewhat fit kind of center left, someone who was like hip with Barack Obama back in the day, and absolutely, and this was really sped up during the pandemic, has tacked very clearly to the right. And now that he's taken over Twitter, rebranded it X, there's no doubt that it is certainly influencing to a fair amount how he goes about running it. So listen, he's to a certain degree, Jack, is going to play a role in the 2024 election, right, by overseeing X. So he will have, and he does. I mean, listen, to a certain degree, it's like the sovereign republic of Elon Musk. I mean, he just goes from meeting one world leader to another, right? He just met with Rishi Sunak, over in London, and the joke was that Rishi Sunak seemed to be angling for a job once he gets ousted from his. Right? He's met with Bibi Netanyahu, he's met with Erdogan in Turkey, so on and so forth. So he's become a geopolitical force.
Absolutely, and a business one as well. Just a fascinating man in his entirety. So it's awesome that you guys have a podcast now to delve into all of the depths of who he is and the businesses he runs. Again, the podcast is Elon Inc. It launches today, hosted by David Papadopoulos. Thank you so much, David, for joining us. Really looking forward to checking that out. Make sure you listen and keep listening to us. We got a little bit more for you coming up here on Sound On. This is Bloomberg.
Your company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. Apple has hit pause on development of next year's software updates for the iPhone, iPad, Mac, and other devices so it can root out glitches in the code. Sources tell Bloomberg the delay, announced internally to employees last week, was meant to maintain quality control after a proliferation of bugs in early versions. Apple shares, they are up right now by 1.5%. WeWork is scrambling to dump dozens of leases after the workspace sharing company filed for bankruptcy protection. And with more on the story, here's Bloomberg's Amelia Pollard.
WeWork signed on a bunch of leases kind of at the peak of the market, before the pandemic. And the only way to cancel those leases really is to file for bankruptcy, because that gives you blanket protection in the U.S. to get out of those leases. So, today they announced that they're immediately trying to get out of 40 leases in New York, almost 70 nationally across the country. So I'm sure there'll be more waves to come, but that's the first jump at the lease exits.
And that is Bloomberg News bankruptcy reporter Amelia Pollard. WeWork has already stopped operating in and moved out of most of the co-working spaces it hopes to exit. And by the way, you can hear more of the conversation on the Bloomberg Surveillance podcast. You can download it wherever you get your podcasts. Uber has delivered a mixed picture of its business, showing a second consecutive profitable quarter. And those are some of the company stories that we are following for you at this hour. I'm Charlie Pelletan. This is Bloomberg.
You're listening to Bloomberg Sound On with Joe Matthew and Kaylee Lines on Bloomberg Radio.
We're almost wrapped up with the second hour of Sound On, a special edition today featuring Jack Fitzpatrick. He's going to have more for us on the latest happenings on Capitol Hill. But first, let's get a latest check on everything else happening in world and national news. Nancy Lyons is in the Bloomberg 99.1 newsroom here in Washington with that. Hey, Nancy.
Thanks, Kaylee. It is Election Day for many voters. Ohio is the latest flashpoint in the nation's battle over abortion access since the U.S. Supreme Court overturned a constitutional right to the procedure last year. Voters in Ohio are deciding whether to pass a constitutional amendment guaranteeing an individual's right to abortion and other forms of reproductive health care. Bloomberg's Anne-Marie Hordern says it could be a sign of where the country is heading.
It's going to be interesting to see the results of this and what potentially they can tell us in terms of reading the tea leaves about next year's general election.
Bloomberg's Anne-Marie Hordern. Nationwide, polling shows about 2/3 of Americans say abortion should generally be legal in the earliest stages of pregnancy, a sentiment that has been underscored in half a dozen states since the Supreme Court's decision. Well, today the Supreme Court has been weighing arguments on the constitutionality of a federal law that prohibits people from having guns if they're under a court order to stay away from their spouse or other family members. Elizabeth Preliger argued today for the Justice Department, saying guns can be kept away from those who are drunk or fail to take a loyalty pledge without a criminal conviction.
I think that there is a long-standing tradition here of recognizing that individuals can be determined through this predictive judgment to be dangerous even in the absence of a criminal conviction.
The case involves a Texas man who says his Second Amendment rights were violated when he was indicted for unlawfully having a gun while under a domestic violence restraining order. A decision will be made before the end of this session in June. The justices seem to be leaning toward keeping the law in place. The Striking Actors Union is rejecting the industry's so-called last, best, and final offer as the strike rolls over into another day. SAG-AFTRA, the union representing some 160,000 striking actors, says there are still several items where there is no agreement. The biggest of those is the use of artificial intelligence as well as the use of people's likenesses without permission. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. Now back to you, Kaylee and Jack.
All right, Nancy, thanks very much. Jack, the White House briefing is going on right now, and Karine Jean-Pierre, the press secretary, is talking about Congress and spending. And what she just said is that the Republican part of the Senate, their border bill is, quote, not serious. And this is after the Senate Minority Leader Mitch McConnell just said border security needs to be part of any supplemental package. So I'm not really sure how to read that. What do you think?
There is clearly a gap to bridge, and it's a significant one. I'm not shocked to hear a forceful rebuttal and a political statement like that from the White House. They're not really the ones who are actively negotiating on that right now. It contrasts a bit with what I heard from Senator Chris Murphy, the Democrat from Connecticut yesterday, who did not like the proposal. He said it's too big, too conservative, but they should be able to find some middle ground. His words yesterday, because this could be the key that unlocks Ukraine aid and all sorts of other things, when you can't fail, you don't. So there's some desperation to get something together, and there are going to be talks that continue.
But you say too big. Is anything that isn't the single subject going to be too big for the House? I think that's the question, right?
It is hard to figure out how many border and asylum policies they can get into before they have opened up Pandora's box, and it's just an attempt to do immigration reform in a week or so. So it's very difficult. It is a broad proposal. It's not just border wall funding. It's requirements that if you seek asylum here, you need to have sought it in any country you passed through that's appropriate for it. They do get into some real policy questions that are not easy to solve in 10 days. And again, this is all on the track of, well, let's see what we can attach to a measure to avoid a shutdown. It's really tough to do immigration policy, Ukraine, Israel, and avoid a shutdown.
In a very short period of time. And it seems no one's really clear yet on if it's going to be a laddered CR or a clean CR, for how long, for what agencies. just a lot of questions we still have. But of course, we'll continue to try to bring you the answers as we have them on this program. Jack Fitzpatrick, thank you so much for joining us on Sound Down today. I'm Kaylee Lyons, and Bloomberg Business Week starts right now.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Massar and Tim Stenivek on Bloomberg Radio.
All right, good Tuesday afternoon from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. You are listening to Bloomberg Business Week. Carol Miller, Tim Stenivek, they are on assignment, but not to worry.
It's Carol Massar.
Carol Massar, thank you.
She's still Carol Massar.
Yep.
I've been working on that Carol Miller transition for quite a long time.
Exactly.
But her husband and my wife.
He has something to say about that?
Yeah, they're both against that.
All right. Well, we're here. We're going to steer you through the next 3 hours. Another good day for markets.
Yeah, absolutely. I mean, the 7th consecutive day of gains. If we close at this level, it'll be the strongest string of stock market gains in 2 years. Ever since Jay Powell came out with his kind of dovish hold, we thought it was going to be a hawkish hold. Markets have been off to the races. I think the S&P 500 has added 6 or 7% in the last 7 sessions, and rates have come down substantially as well. Right now, the U.S. 10-year at 456.86 just means financial conditions are a little bit easier, and that gives more room for stocks to run.
Absolutely. And Matt, I've got to call out WTI crude oil. It's off more than 4% today.
That helps
now it's $77 a barrel. Just a huge move in oil, and we're seeing that in the energy stocks across the board off kind of mid-single digits.
And just so strange, right? If I had told you there's going to be a war in the Middle East, a month into it, where do you think oil is going to be? You probably wouldn't have said lower.
No. And it's just really interesting. So it kind of goes to the demand out there. But anyway, so we're looking at that. That's kind of gets your attention as well. Yields are kind of coming in yet again. The 10-year Treasury is off 7 basis points. Let's call it 4.57% on your 10-year. So the narrative is kind of holding out there, and you kind of wonder. You look back last week, and you think about, was that kind of peak rates there a week and a half or so ago, or is this just kind of a little bit of a move here? So people are trying to get a sense of how much is behind this move here in rates, and then behind stocks.
I still wonder if it was peak rates, right?
Yep.
October 19th was the day I think the 10-year went up through 5%. I remember hearing you say that, and we saw really the entire curve up above 5% at one point, and it looks like that may have been it.
Yeah, it does, and I think that's kind of what the conclusion was from a lot of folks who were listening to Fed Chairman Jay Powell last week. So that is kind of the debate right here on these markets, and the bulls are certainly kind of getting the better of it right now. Again, the S&P 500 up 0.3%. I think now's the time. I think we head over to our TV colleagues, Bloomberg's Countdown to the Close. That starts right now.
Countdown to the Close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the Countdown to the Close. Scarlett Fu and Katie Greifeld here with you on the TV side, and we're joined now by our colleagues in radio, Matt Miller and Paul Sweeney. And because of that, welcome to all of our Bloomberg audiences across television, radio, YouTube, and originals. Matt Miller, good to see you again.
It's great to see both of you, too. I'm glad to be here in the chair with Paul today. Carol and Tim are somewhere. Vegas or New Orleans or something.
They could be anywhere, honestly.
Yeah. Yes, they could be anywhere.
In any case, they're missing out, right? It's their loss because we're looking at a 7th day in a row of gains, the longest string of wins in 2 years for this stock market, as Jay Powell is a little bit more dovish than people expected, and rates have come down. Oil as well.
Yes.
Down under $78 a barrel.
Yeah, Matt and I were just talking about it. Have we seen peak rates a couple of weeks ago? Again, we've seen the rates pretty much across the board. A couple of weeks ago, you look across the 2-year, the 10-year, the 30-year, it had a 5 handle on that. And was that the peak? And that's kind of what that's a question we're asking ourselves right now.
Paul Sweeney, peak rates, are you on record?
Oh, absolutely. There's no recession either. I've been on record for that for about 3 or 4 months.
You can say peak rates today, and tomorrow might be a completely different story.
Exactly.
Right? So you're good for now.
Well, I'm just trying to talk my book because I'd like to refinance my mortgage.
You and everyone else, right? All the people who are looking to buy a home. So there's a story that I was really intrigued by. Apparently Steve Cohen, who of course is the hedge fund billionaire, but also the owner of the New York Mets baseball club, is planning to team up with Hard Rock International to propose building an $8 billion casino and entertainment complex right next to Citi Field. It's going to be on a 50-acre parking lot in Queens. Is this the death of Mohegan Sun?
It's so weird, right? They're going to issue, I think, 3 licenses for casinos in what is being called downstate New York. I would call it the New York City metropolitan area. And actually, they're going to call the park something like that. It's going to be Metropolitan Park, I think, around this complex. A 20-acre park. He's going to partner with a bunch of famous people who made, like, the High Line, right? But every time I look at Steve Cohen lately, I think of the guy who played Pyle in Full Metal Jacket, because did you guys see Dumb Money? Did you see Dumb Money?
Yes,
I want to. I haven't seen it
He
yet.
is not Dumb Money. He is about
No,
the
but he comes off as the smartest guy in the whole film, actually.
Exactly, and I think that, you know, for that part of the city, that would be great. I mean, it's Citi Field is a fantastic building, but boy, what we're seeing in the stadium business these days, especially down in Atlanta, is not just the stadium, but all the areas around it with its retail and multiple use, and I think that's what he's looking at.
Yeah, I mean, definitely the area immediately next to Citi Field could use some sprucing up.
I'm still stuck on downstate. That feels like a big insult. But let's move on to one of the other big stories today. This was really interesting. Shein, I believe that's how you pronounce it.
Shein?
Scarlett and I, well, we think it's Shein. We Googled it, etc.
We checked with our experts on our team.
Yeah, the young people on our team, because it feels like another iteration of fast fashion. But in any case, it's said to target up to a $90 billion valuation in a potential U.S. IPO. Again, this is according to people familiar with the matter, but apparently the company has told prospective investors that it's aiming to fetch that valuation about $80 to $90 billion in any listing, though of course a lot of this remains uncertain.
Yeah, but you know, they're targeting $80 to $90 billion, but in private trades, Shein's valuation has dropped below the $66 billion it got in a funding round back in May. You mentioned fast fashion. I feel like this is the 2023 version of, what is it?
Forever 21.
Forever 21 or
Exactly.
H&M or something like that. The clothes apparently don't last. You can't wash them.
Yeah,
is what we're
pretty much.
told.
They disintegrate, potentially.
I mean, obviously, I don't have to point out that fast fashion is like bad for the environment and bad for humanity. And basically, it's just people being selfish, taking advantage of children in third world countries to do work for them. I mean, that's not the wrong take,
Is that
right?
a more controversial take than peak rates? I don't know.
Exactly. Well, you know, you think we're talking about companies and eye-catching valuations on a day when we work bankruptcy. You know, we're talking about a company that had you know, it's just a
Fun
monster
juxtaposition.
valuation back in the day.
Well done bringing together all the top stories for us, Paul Sweeney.
Thank you.
That does it for now. We're going to be back again in less than an hour, live on television and radio, as well as YouTube at 4 p.m. Join us for our Beyond the Bell coverage when we take you through today's market close. And of course, a reminder that Bloomberg Business Week is now available on Bloomberg Originals.
This is Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
All right, Matt Miller, Paul Sweeney here with you, Bloomberg Interactive Broker Studio. We are streaming on YouTube as well. Bloomberg Markets, Carol Masser, Tim Stenevec, they are on assignment. I like saying on assignment because you don't really know where they are. It kind of gives them the benefit of the doubt.
I mean, we say on assignment no matter what. If somebody isn't here because that person is sick or has just skipped work or is literally on assignment, it doesn't matter. We're going to say on assignment no matter what.
Exactly. It sounds so much better. One person who is on assignment, but here is Michael McKee. He joins us here in our Bloomberg Interactive Broker Studio. So, Neil Kashkari, you chatted with him earlier today.
Quite earlier
What'd
today.
you guys talk about?
I think we talked a little bit about monetary policy and the economy. I mean, we did not talk about the Minnesota Twins, but we did have a very short conversation about the Minnesota Vikings, if you want to go back to sports. And Josh Dobbs, how they solved an unemployment problem at Minnesota's quarterback.
The Vikings play football, right?
Yeah.
That's American football we're talking about.
Man, you sound
I can't believe they talked about American football on surveillance. I mean, they are so obsessed with British soccer.
Well, Tom wasn't there, and John was busy talking monetary policy with Neil and I, so we slipped in there.
So what does he say about, you know, he was one of the people that I think made the most astounding turnabout as the Fed went from transitory to we got to do something about this inflation, because he was, I feel like, very dovish and became incredibly hawkish. Is he still like that?
He's hawkish. I wouldn't say he's incredibly hawkish, but he did transform, which is interesting because his predecessor in Minnesota, Narayana Kocherlakota, made the same trip. I mean, they have St. Paul there, but it was St. Paul who was on the road. They're not on the road to St. Paul. But they seem to have been struck by lightning at some point. Everybody on the Fed is anti-inflation, and so it really becomes just
even
a matter
Goolsby?
of... Yeah, even Goolsby. It just becomes a matter of degree, and that is somewhat a matter of strategy and tactics, how you want to attack inflation. But they all know they need to do that. Now, he was... Neil Kashkari was one of the first to really push for raising rates and has been a strong voice for continuing to raise rates. But now he's at a point where he's willing to wait and see if they need to raise rates more. He's not ruling it out, which is what counts for being hawkish these days, I guess. But he's not ruling it in either. He's no longer saying we need to raise rates more.
So, I mean, is that... I don't know. It just seems the inflation fight, if you talk to some of the academics like Matt and I tend to do, they will say, Cam Harvey at Duke, for example, they say the Fed's looking at the wrong data, the backwards data. If it looked at real-time data, inflation's whipped. We're at or below 2%.
That's what they say. By the way, it doesn't feel that way. I talked to Cam Harvey on that day, too. Yep. And I've talked to a lot of other people that are way smarter than you and me put together. Sure. And they do say inflation is something that's in the rearview mirror, but it really just doesn't feel that way, Mike.
Well, here's the problem, is when they're saying it's in the rearview mirror, they're looking at a short-term period, like 2-3 months annualized, which, yeah, sure, the numbers are down. 2.5% on that basis, but it's not on a year-over-year basis down, and it doesn't mean that prices are falling. It just means the rate of increase has slowed. So
that's my problem with it. That's my problem with it, Mike McKee, economist. Even if inflation is zero, I'm still going to feel like prices are too damn high.
You should run for mayor. The rent is
too damn high.
Yeah. Yes. But you're not going to see a lot of prices go down. You will see in some areas where prices are somewhat volatile because they do respond to supply and demand, like airline tickets, gasoline prices. Those go down, but once you get a little bit higher staples prices, they will stay up there. Now, we also have to contend with food prices that are volatile because you don't know what's going to happen with the beef herd or the pork herd or something like that.
It's the New York Strip at Keene Steakhouse in 36th Street. That's my go-to barometer. It was 48. Now it's close to 68.
Yeah, well, New York's always had a problem with steakhouses because the people who go to steakhouses have always worked on Wall Street and made enormous amounts of money. And the guy who runs the steakhouse says, I've got pricing power.
Right, exactly.
But overall, commodity prices go up and down, and that leads to prices going up and down. But we haven't seen a lot fall back lately. Hopefully that starts to happen, but it's one reason people are upset. They still see price levels high.
That's the point. That's
Matt's point. The rate of change.
Well, and
car prices never go down, which is why. Except for Tesla. I'm sorry, Elon. Tesla prices go down.
Ducati just came out with a new multi-strada that costs $38,000 to start. 38 grand.
For a motorcycle.
I mean, you could buy a Tesla for that.
That's a motorcycle, people.
Yeah. So, Mike,
gasoline, $3.40.
In terms of financial conditions, they were pretty tight when Jay Powell was talking last week, right?
Yeah, they had gone up a lot in the last month or so.
But now they're coming down. It must be, at least judging by what I see in terms of the 10-year yield, right? Strength in the dollar, the price for a barrel of oil. All that stuff has gone down since the Fed.
But it only went up a couple of weeks before the Fed. So the impact is very small on that. On the overall economy and on borrowing costs from that. We had 1 week where mortgage rates went over 8%, and now they're back down below it. We're still tight. I mean, rates to borrow are still high, but they're not as high as they were. And the change wasn't really enough even if sustained, to make a huge difference to the Fed. A lot of people wanted to think so, and it was sort of an excuse to not raise rates, but they knew that probably wouldn't be sustained. It's hard to sustain a rally like that, especially when Bloomberg ultimately writes it was a bunch of hedge funds with a massive short in the Treasury market. So it isn't a big deal, and right now we seem to have settled out in a range that won't change much until we get some evidence that we're really in a new environment,
right?
And inflation's either going up again or going down to the point where the Fed could consider cutting rates.
And I'll tell you what the problem a problem out there. Thanks to a note from Torsten Slok, he says there are 33 million small businesses in the U.S. and the monthly survey from the NFIB shows that small businesses are now paying 10% interest on short-term loans. That's not bueno. I mean, that's going to really pinch, I think, a lot of these smaller businesses.
One of the things you always have to do with the NFIB survey is go to
National Federation of
Federation of Independent Business.
There you go.
You need to go to the back of the survey and look at the number of the percentage of small businesses who are seeking credit, and it's about 2%.
Oh, okay.
So yes, if you're seeking, and the problem with small businesses too is we don't know how long these businesses have been around, and new businesses, obviously, especially in this environment, are going to have a harder time getting credit. But the Federal Reserve's Senior Loan Officer Survey came out yesterday. It's quarterly survey, SLOOS they call it, and basically what we have seen is a big drop-off in business demand for loans, both large companies, medium companies, and also small companies. They are not going out to apply, and part of the reason is probably because they termed out what lending they had before rates started to get really high. So they're interest rate insensitive at this point.
Terming out is a smart thing to do.
Yes.
Terming out is what any smart person would do when you have zero rates, right?
How about the U.S. government?
I knew where he was going with this.
Yes, exactly.
Janet Yellen argues that they have brought down the average maturity. It's complicated because you have to look at all the funding costs and what it costs the government over time, and their argument is that they try to make it the least cost alternative. Now, maybe they made a mistake. Maybe they didn't. I'm not going to stand in
Did you see Jonathan Levin's column today?
No.
He was like, the Treasury is not a hedge fund or a household, which is a great observation.
Well,
but after that, useless. Because
definitely not after.
They should be trying to borrow at the cheapest rates they can, and if they can get super cheap rates, then go out for huge maturities. We're never going to get back to zero again.
Well,
and it's fair to say Mnuchin could have done it too. Obviously, yes. I don't think he's considered quite as brilliant as Janet Yellen, right?
No. Yeah.
Really?
I feel like she missed the bus.
All right. Michael McKee, thank you so much for joining us. Michael McKee, international economics and policy correspondent for Bloomberg News, joining us live here in our Bloomberg Interactive Brokers studio here. S&P 500 up 0.3%. The NASDAQ's up 1%. I'm going to call it the VIX for Tom Keene. It's at just below 15. We're going to have more coming up. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg with the Dow, the S&P, NASDAQ 100 index, all advancing. It is not, though, a broad-based rally. We have got the Russell 2000 sinking today, down by 0.3%. But the S&P up 13, up 0.3%. 7 winning sessions in a row on the S&P 500 index, longest winning run in 2 years. Investors seem to be shrugging off the latest attempts from Fed speakers to tone down Wall Street's dovish bid. Right now we have got the Dow Jones Industrial Average up by 65 points, up 0.2%. The S&P, as I mentioned, higher by 0.4. NASDAQ surging now by 1%. 10-year yield 4.57%, with a 2-year right now 4.91%. Gold down $9 the ounce to $19.68, drop there of 0.5%. Crude, big story today. West Texas Intermediate down 4.4%, now at $77.23 a barrel. So again, the 10 years yielding 4.57%. What about the yield environment, and how does that affect equity investor sentiment? Katie Kaminsky is Chief Research Strategist at Alpha Simplex Group.
Investors have woken up to the idea that 5% yields, at some point there's a buying point where you think, well, there's a chance this could actually go down, and now you start to see this equilibrium occur where you're seeing the disinverted curve, which is something we've been looking for since the beginning of the year.
And you can hear more of that conversation on the Surveillance podcast. You can download it wherever you get your podcasts. In a rare move, Apple has hit pause on development of next year's software updates for the iPhone, iPad, Mac, and other devices so it can root out glitches in the code. We've got Apple shares trading higher today, up by 1.6%. Again, recapping, stocks are advancing. S&P on track to make it 7 in a row. The S&P 500 index up 15 points right now, a gain of 0.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie Pellet, thank you so much. We appreciate it. Matt Miller, Paul Sweeney sitting in for Carol and Tim here. Bloomberg Business Week. We're streaming live on YouTube, so head over to YouTube and search Bloomberg Radio. You know, I always thought WeWork was such a good idea. Flexible.
Me too.
I mean, but it went bankrupt today. And listen to these numbers. It had a peak valuation of $47 billion, but it listed on its bankruptcy filing $19 billion in liabilities and $15 billion in assets, and that's not bueno.
By the way, just because it went bust doesn't mean it wasn't a great idea. I actually went down to their first WeWork, shared office building with Adam Newman like 10 years ago because he was pitching me the idea for my then television show. And he brought me into the building, which was cool, the neighborhood, totally cool, and they had like a keg on the floor in the middle of the room. Nothing fancy, literally just a keg in a barrel with a tap. And I was like, dude, this is an awesome idea.
Well, now he's talking to people like Amelia Pollard. Amelia Pollard is our bankruptcy and distress reporter for Bloomberg News. Amelia, cool, fun idea. Matt loved it. What happened?
Yeah. Well, I think the question, Matt, is was a keg in an office worth $47 billion?
Okay, the valuation may have been a little high.
Yeah, I mean, I think that it was, and I think there are a lot of people who responded just like you, obviously SoftBank did, and other investors who just, plied money into this company and really spurred Adam Newman to expand so rapidly in the course of just a few years. And so I think it was just this crazy contraction effect. Like you went from, a point of being worth $47 billion just around 4 years ago. And then you had to pare down really fast. I think that, the value of the company just halved very quickly, after the failed public offering.
And if you look at SoftBank's investments, a lot of them went like that. It wasn't just WeWork. They just were part of a machine that blew up valuations to incredible heights. And it wasn't just, VCs in early stage investments. Bitcoin traded at almost $70,000 just, 2 years ago. Mm-hmm. So there were a lot of things that were at unsustainable heights, let's say.
Yeah.
WeWork is just a very special story because of the levels it reached and the characters involved.
Totally.
And you and your colleague here have a great, who is it, Ethan Steinberg, make a good point here. WeWork was never a conventional business. For a substantial portion of its existence, it operated with a stated mission to, quote, elevate the world's consciousness. The spiritual ethos that founder Adam Neumann and his wife, executive and co-founder Rebecca Neumann, fostered sometimes made the enterprise look more like a religion than a startup. Where do we go from here? Because they filed bankruptcy in New Jersey. It doesn't get much worse than that. So is this a business that can go on with maybe a new capital structure, new investors or something?
That's the plan. So in this case, bankruptcy is really being used as a tool, largely. They have a lot of expensive leases, and they're really trying to pare down their footprint at large. Today alone, they announced they immediately want to get out of 40 leases in New York City.
Saw that, yeah.
Yeah,
that's
so
big.
That's a big amount. And I think that the notion is, as we said in the story, there was kind of this issue of it being almost a religion. They had all these other enterprises they started, including an alternative school at one point.
Yep.
So they're really trying to get back to basics now more than ever, paring it down to the co-working space, bread and butter, and having a smaller footprint.
What was the school? It was like Brick Doors in Tribeca or something.
Something like that. Yeah.
So actually, I was thinking about you earlier, Paul, when I was talking to Amelia about this this afternoon, because this is a commercial real estate. This is an office story, right? The values have just dropped substantially. So when WeWork was negotiating with these women and men to try and get lower leases, weren't they like, hey, listen, either you give us a deal on the lease or we're going to file for bankruptcy and then you're completely out?
Yeah, it was definitely used as a threat. And I think, WeWork is a really specific business model in the larger CRE market. But we do see, I think it's $1.5 trillion of debt coming due in the next 2 years for commercial real estate. Yeah. So there's definitely more pain to be seen, whether it'll take the form of corporate bankruptcies or, just defaults on buildings. There'll be more to come.
And when I say, Matt and I talk about this a lot, we don't know what the values of these buildings are. I was just walking down 3rd Avenue yesterday to get my booster shot. Walked past the Lipstick Building, iconic New York City building on 3rd Avenue. But one could argue it's dated. It's not the newest stuff out there. When that thing trades or when that mortgage comes up for renewal, what value do you put on it then?
Yeah,
I don't know.
Good question.
And I think that's going to be, as you said, more than $1 trillion.
Well, we talked to a lot of people who say, Amelia, Paul and I have a radio show, typically earlier in the day, from 10 to 1. Paul's on from 9 to 1, 4 hours in a row. Not a great idea, but so we talk to people all the time on that show, and they tell us when these things trade, some of these buildings on 3rd Avenue are going to be trading at 30 or 40 cents on the dollar. Which is enough to drive, I would imagine, a lot of landlords into bankruptcy.
Yeah, we haven't seen that yet, honestly. But we've seen other, areas related to the real estate market, like any company that has exposure to mortgages, for instance, are starting to feel pain, obviously. But I do think that a lot of these commercial real estate leases are on like 10 or 15-year terms. So sometimes there can be a little bit of a delay, in when interest rates rise and when there might be some more pain in the market.
So Masahiro-san, SoftBank, are they wiped to zero here? Do we know what happened to them?
Yeah, I mean, the sense is that they are losing a lot of money. Exactly how much, is still kind of to be seen. There's a proposed restructuring deal where a lot of the debt will be converted into equity in the new company. Yep. But SoftBank has been, one of the most devoted investors to WeWork. They've just put, money after money. They had a huge rescue plan in 2019, and they put more money in more recently. And so, but they will lose money on this deal for sure.
I was just doing the bio on Adam Neumann, like where is he now kind of thing.
Yeah.
Neumann founded another real estate company called Flow in 2022. It operates residential apartment units. And the Bloomberg estimates his net worth at still $1.2 billion.
Yeah.
So he's still out there.
He's still out there. He actually came out with a statement yesterday, even before the company officially filed, kind of as a curtain raiser to when it files, inevitably in the next couple hours,
right.
Saying that it was a disappointment to see, it fall into bankruptcy. Obviously, I'm sure he's not happy to be watching this from the sidelines. He was a real showman in the whole.
So he's married to like Gwyneth Paltrow's cousin, right?
I think so, Rebecca Neumann.
Were they married before he got super famous and mega loaded?
Yeah, they co-founded the company together. She was a co-founder.
Yeah.
So she was I think she played a huge part in the, whole rise of the company and was an executive herself.
Yeah.
All right. So is there any sense of how long they're going to be in bankruptcy here? I mean, is it going to be quick or?
Yeah,
it sounds like there's so many leases all over the world, it could take a long time.
There are a lot of leases. Yeah, the hope is to get out, I think, by around April. That's a moving target, obviously, in bankruptcy, but that's pretty quick. You know, it's a big company, and there's a huge capital structure, really complicated debt load. They did an out-of-court exchange in March, which is only further complicating things now. But yeah, April, I think before the summer is the hope.
And it's got to be like a catalyst to reset leases or prices at a lower level, right? Because
big time, yeah.
Yeah. By the way, there's a docu drama about Adam Newman on one of the streaming channels, right? On Netflix or on Hulu or HBO.
Recommend?
Did either one of you see it?
No.
Amelia?
No.
Okay, I haven't seen it. Anybody in control room see that documentary about? No. Yeah, nobody's seen it. And Jared Leto is pretty awesome.
Well, I got like these huge commutes now, so I'll definitely
you can watch it on your commute.
Yeah, I can watch a few movies on my commute.
And Amelia also was showing me BCY Go early on the terminal.
Oh yeah,
it's a great function. BCY Go.
All right, I'll
to check out bankruptcies.
Yeah, it's our master bankruptcy function. I think it'll become well known in the next year to everyone.
So you
here,
plan on
probably.
being busy. Very good.
Yeah.
All right, Amelia Pollard, thanks so much for joining us. Amelia is a bankruptcy and distressed reporter for Bloomberg News. Joining us live here in our Bloomberg Interactive Broker studio. Let's head down to Washington, D.C. right now. Nancy Lyons has got World International News for us.
Thanks, Paul. A month into the war between Israel and Hamas, Israeli troops are advancing from the north and south toward the heart of Gaza City. That's according to Israeli defense officials who say the soldiers are fighting within the built-up part of the city. And we're also hearing from the White House some 400 American citizens and their families have been evacuated from Gaza so far, and 569 aid trucks have entered from Egypt, but officials say that's far from adequate. Bloomberg's Irv Chapman has the latest from Washington.
Israel is still being pressed to pause the fighting to allow more aid to flow. National Security spokesman John Kirby said, but Israel is taking some steps to reduce civilian casualties.
They have gone in on the ground, putting pressure on Hamas leadership to find, fix, and finish some of that leadership. They're moving into Gaza with smaller units than what a lot of people thought they would do. You can be more careful in your targeting. The risk to your troops is higher.
Kirby said while 1.5 million Gazans have been displaced by the fighting, Hamas is keeping more from moving so they can be war victims. In Washington, Irv Chapman, Bloomberg Radio.
The U.S. Supreme Court today heard arguments concerning whether the Second Amendment covers the gun rights of those found to be dangerous, specifically those under a domestic violence restraining order. Chief Justice John Roberts quizzed J. Matthew Wright, who represents the man bringing the suit, who fired guns in public and threatened others.
You don't have any doubt that your client's a dangerous person, do you?
Your Honor, I would want to know what dangerous person means.
Well, I mean, someone who's shooting, at people, that's a good start.
That's fair.
The justices signaled a reluctance to strike down the federal gun ban for those deemed dangerous. Their decision is expected by next June. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. S&P on track for a seventh day of gains. Best level of the day right now, buying into the close. The S&P closing in on 4,400. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks with a bid after shaking off some early morning weakness. Dow's currently up 94 points. The S&Ps are higher by 20, while the NASDAQ is up by 152. The U.S. 10-year yield at 4.57%. Gold is down 10. Oil is also sinking, but Bitcoin is higher by 1.1%. Among the main 11 S&P sectors, leaders were tech and consumer discretionary. Energy and materials were under pressure. And leaders to the upside in the Dow, Intel and Salesforce, while Dow and Caterpillar led to the downside. After earnings, Datadog soared 28%, while Air Products fell 13%. To its lowest level since March of 2020. In other news, Elliott has taken a stake in drug maker BioMarin. And wrapping things up, Akamai and Bumble report after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. And to hear live breaking news over your Bloomberg, type Squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
Yeah, Carol and Tim's show has great music.
It does.
I mean, just
the best music. I'll shout out to their producer, Paul Brennan.
Who?
Paul Brennan.
Never heard of him.
He and Ariel Agami typically put together like a slammin' playlist for every single day. And it's a 3-hour show, so it's like a lot.
Exactly. You know? All right, we're driving to the close. Hey, Matt, it's not Friday, but we have a little treat for you today. We can talk municipal bonds again here.
Great.
Yeah, we got Nick Vendetti joining us here. He's a senior fixed income portfolio manager at Allspring Global Advisors. I knew them back in the day before the Allspring name came from somewhere.
Nick, Margie Patel shot, right?
What's that?
Margie Patel.
Well, Strong Funds is my.
That's right.
I go back to Strong Funds. Dick Strong, back in the day, those guys would buy anything I brought through town. It was great. I love them. And then they'd toss it out if they didn't like it after 15 minutes. But that's okay. Nick Vendetti joins us here in our Bloomberg Interactive Brokers studio here. Hey, Nick, what are we doing in a municipal bond market these days? You know, we had such a run-up in rates. And now, like Matt and I are having a conversation, have we seen peak rates here? I don't know what's going on. What's been happening in the municipal bond market this year?
Volatility.
Okay.
Look, I think rates are interesting, obviously, on a day-to-day basis. They move 15 basis points up or down. No more, no less. It's just crazy. And obviously, that's been driven by Fed interaction, but it's also been driven by the Federal Reserve members showing up on programs like yours and saying the crazy things that they're wont to say from time to time, which is just as impactful to markets. I do think that we are probably seeing a crest in rates. You know, they hit 5% on the 10-year and retreated back. Maybe they go a little bit higher for points in time, but ultimately I think we've seen the peak.
And so you also think we've seen peak inflation. I mean, not just peak inflation, but you think inflation is on a downward trajectory towards the Fed's 2% target?
I do. 2% may be kind of pie in the sky, right? We still have a long way to go.
That's headline PCE, by the way. Oh, that's what they got to hit, right?
Yeah. That seems like a tough road to manage, especially when we're, you know, at least partially funding a couple of wars and obviously everything else that's taking place in the economy. But clearly inflation is on the way down, right? Restrictive policy is working. We're starting to see some softening in employment numbers, those types of things, which I think indicate pretty strongly we're going to get a turnover in the economy.
I mean, this is a good time for me then to ask what you think about the deficit spending, the debt, which is one of those things that like grinds my gears. But I see, since you studied applied economics at the vaunted
University of North Carolina, at UNC. You must know what you're talking about. Then
such smart people over there.
Yeah. then what do you think? Does it matter to the bond market if we spend like $2 trillion more than we have every year?
At times it does, and at times we can somehow ignore those realities. Look, I think ultimately the lesson we're going to start learning very quickly, especially at these higher rates, is that from the smallest municipality all the way up to the federal government, we are a debt-financed society. And that debt is getting more and more and more expensive with potentially fewer and fewer buyers. And ultimately, I think our uppance will come as it relates to that math, but we're not quite there yet.
All right, in your notes, you've got something that grabbed my attention. Muni bond investors may be more tuned in to U.S. macro economy than anyone on earth, and macro indicators are pointing toward a recession in 2024. Now, you've probably heard, because it's everybody's heard. I pulled my recession call off the table 4 or 5 months ago.
And he went to Duke.
And I went to Duke. And so, but you guys are still thinking that, right?
Yeah, I think we are absolutely going into a recession. No landing, no soft landing, whatever buzzword people are using to kind of decide what's going to happen. Look, the reality is if you look back over the last 18, 24 months or so, GDP has been driven by a single factor, consumption, right? And that consumption has largely been credit card financed. So you have credit card balances that are as high as they've ever been at rates that are frankly as high as they've ever been. The days of minimum payment USA are probably coming to an end. You pair that with a couple of other factors like student loan payments. Look, I have to remind people all the time that a lot of the people we deal with on a day-to-day basis, they're not real. They're not real people, right? Real people in this country don't make $100,000 a year. They make like 40. And if the average student loan payment for someone 25 to 40 years old is somewhere between $250 and $400 a month, you're talking about $5,000 a year. For someone who makes $40,000, $5,000 a year is everything. That's $5,000 that's no longer being spent on Cheetos and stickers and glitter, whatever it is people buy, but that's going to have a meaningful impact on consumption and GDP.
Well, that's no fun.
No. But I think, look, this is what we've been hearing this is what Torsten Slok has been telling us for months now. You know, people are spending more on credit cards. Those bills are getting higher and higher because rates are so high. Some would say usury. You know, car payments are getting missed. You know, food bills are higher as a percentage of your disposable income. I guess if it's disposable, as a percentage of your income as they ever have been before. So it's going to be tough. How bad do you think it's going to be? Like, what do we see in terms of unemployment, for example?
Yeah, I mean, look, I think the good news is that we're smarter than we have been in the past, theoretically. And so I'm not calling for grapes of wrath depression or anything. But ultimately, you know, I think we could see unemployment rates tick up, 100 basis points from where they are. And relative to history, that's actually not that high, but relative to more recent history, that's a pretty big shock. And I think a pretty big shock, one, to the system, but also a pretty big shock psychologically to investors across all markets.
Don't you think that the government will try and do something about that? I mean, we are also headed into an election year. That seems pretty unacceptable to the Biden administration to me, unemployment at 5%.
It absolutely does, right? And so I think they will try to do whatever they can to mitigate that as many ways as they can. But you also
I was thinking about just spending more money. That seems to be the playbook, right?
Yeah. The problem with that is that is inflationary, right? And so you have this push-pull taking place, which is why, again, I think it's pretty difficult that the Fed is ever going to achieve their target, given that these two competing realities exist so strongly in the world today.
Have you had your first snowfall yet?
We have, yeah. Halloween, we got dumped on in
Menominee Falls,
Wisconsin.
Right?
That's right.
That's awesome. Again, here's my call again. Pound for pound, the smartest investors I've ever encountered are in Milwaukee.
Why is that?
I don't know.
I've heard you say that before, but
yeah, I mean, it's
just
all the strong people, the state pension fund, the really smart people, lots of little Nicholas, and I mean, lots of little funds in there, and there's even more now than when I was on the south side. And something in the water out there. Maybe it's that University of Wisconsin thing. I don't know. But anyway,
this sounds right to me. Yeah. I feel pretty good about that call.
Exactly. Yeah. All right, Nick, thanks so much. Nick Vendetti, Senior Fixed Income Portfolio Manager, All Spring Global Investments in Menominee Falls, Wisconsin. This is Bloomberg.
your company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. Apple has hit pause on development of next year's software updates for the iPhone, iPad, Mac, and other devices so it can root out glitches in the code. Sources tell Bloomberg the delay announced internally to employees last week is meant to help maintain quality control after a proliferation of bugs in early versions. Apple shares today, they're advancing along with other big tech names. Apple up now by 1.5%. Tesla is going to be raising the price of its Model Y variants in China following a refresh of the car in October. And we get more from our Detroit bureau chief, David Welch.
But Tesla's trying to get some price increases after they've dropped them as much as 30% over the past year. And in China, they might be able to do it. The Model Y has been refreshed, so a bit of a newer product. It's one of the best-selling EVs. And also in China, you've got so many government incentives and programs pushing EV sales. It's not like in the U.S. where we're seeing this slowdown in sales growth and everybody's struggling to maintain price and maintain volume. It's more a matter of, they think they can get some of this pricing back because the market may let them do it.
And right now, Tesla shares, they're up by 1.4%. ExxonMobil has elected Dina Powell McCormick, a former advisor to President Trump, to its board of directors. She was one of the few Bush administration officials to win a role in the Trump administration. WeWork was once the biggest private office tenant in Manhattan. Now it is moving to nix dozens of pricey leases in New York immediately after filing for bankruptcy. And those are some of our top company stories. And this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenivek on Bloomberg Radio.
All right, Matt Miller and Paul Sweeney sitting in for Carol Masser and Tim Stenivek here. They are on assignment, so we say. So, Matt, when I think about mass transit in the Metro New York area, I just selfishly think of New Jersey Transit and my own personal needs and gripes. But our good friends, including yourself up in Westchester, you guys have got some issues too, and it's more on the
and Connecticut, dude.
Yeah, yeah, exactly. I mean, the
it's all about Metro North for those of us that would prefer to go to Grand Central. I know you choose Penn Station, which I don't get.
It's a disaster.
No, when I was looking for a house, I thought I want to be anywhere that has access to Grand Central and avoids Penn Station. So New Jersey and Long Island were out.
Yep.
And Metro North is so easy. I usually drive my car, but when I can, I take the train because it's much more relaxing. I can do work on it.
Yep.
It's not too crowded, especially now that a lot of people want to work from home.
Climate change is a big issue for that train line here. Bloomberg's got a story. Liam Denning has got an opinion piece out there talking about climate change is creating some crazy weather, which is impacting a lot of the train service coming in and out of the city. There was a mudslide just recently that temporarily shut down one of the lines, I think the Hudson line. Then, of course, Superstorm Sandy just crushed everything. But basically
and what we've had recently is kind of Superstorm Sandy. A lot of people probably don't even remember it because it was over a decade ago now.
Brutal.
But that closed the New York Stock Exchange for 4 days in a row.
Yeah.
And what we've had recently, I don't know if it's been the same in New Jersey, but it rains every
weekend.
Single weekend.
Yes.
It'll be like nice weather Monday through Friday and then start pouring. And so we've had 7 wet weekends in a row. And as a result, you had a retaining wall break, possibly a result, I should say, because we don't know exactly. Behind a house in Briarcliff, that's up in Westchester. It's a really nice little leafy suburb there, quaint. And the mudslide just covered the tracks, stopping the Hudson line, which carries 10 million riders every year. One of the 3 commuter lines that Metro North runs up there, and that is going to be a problem if those kind of things continue to happen.
Absolutely. All right, so we'll keep an eye on that. We all depend, or a lot of us depend upon train service in and out of the city. Me, it's New Jersey Transit. All right, so let's head over now to our TV colleagues. Bloomberg's Beyond the Bell. That starts right now.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
All right, about 2 minutes away from the end of the trading day, Katie Greifeld and Scarlett Fu counting it down to the closing bell. Here to help take us beyond the bell, we have a global simulcast in the hot seat today. It's Matt Miller and Paul Sweeney. We bring together all of our audiences, Bloomberg Television, radio, YouTube, etc. And Paul, it looks like we're going to do it. Or should I toss it to Matt? In any case, 7 straight days.
You can. I'll take it, Katie.
Yes.
Whatever you throw my way. Yeah, 7 straight days of gains. That's the longest streak that we've seen in 2 years. And we're helped by, obviously, falling rates. You have the 10-year trading at 4.57 right now. Just about 20 days ago, I'd say we were up, maybe even less. We were up at 5% on the 10-year. You've also got falling oil prices. The Bloomberg Dollar Index has come down. So everything looks good for risk-on moves, and that's why we've seen them for a week and a half.
Yeah, I think what gets my attention here is oil. Boy, off more than 4% here today. WTI crude oil at $77.43. It really gets your attention, and it just kind of seems counterintuitive when we've got 2 hot wars going on over in parts of the world where oil is kind of important.
Yeah, that's a really good point. It feels like oil's been losing momentum ever since the October 7th attack by Hamas on Israel. Like, it definitely climbed, and then since then, it hasn't really regained its any kind of momentum there. And it's not just oil. We're looking at gold, silver, copper, the entire commodities complex lower as the dollar strengthens.
Yeah, it's been interesting, of course, to watch the commodity space as those geopolitical tensions really arise. But right now, we're about 10 seconds away from the closing bell. As you take a look, the S&P 500 looks like we're going to finish with about 0.3% when it comes to gains on that index. That's good enough. 7 straight days. How many times can we say it? Longest streak in 2 years. The NASDAQ as well, having a better day as big tech really catches a bid up about 0.9%. And of course, the Dow Jones going to finish about 0.2% higher, Scarlett. And again, it's not necessarily about the magnitude on a day like today, but more this long streak that we're looking at.
And it is quite the streak. We're, of course, keeping an eye on the settling number so we can give you just how much the S&P has gained during that period. But let's take a look at the group performances here. For the 24 industry groups in the S&P 500, retail, consumer durable, and apparel, and that's really home builders, and software leading the way, all up by at least 1.25% on the downside. Paul mentioned oil prices coming down, and that is dragging the energy complex lower. That group is off by 2.25%. Materials and real estate investment trusts also losing ground.
I'm looking at some gainers. Here, starting with Uber, $100 billion company, had a second consecutive profit on the bottom line, but its 9th consecutive operating profit, which beat analyst estimates at $1.09 billion. They also had bookings that were better than expected, and although sales fell a little bit short, they said it was a business model change. Investors seem to be happy to give them the benefit of the doubt. Also, Datadog.
That's still a thing.
Had you ever heard of Datadog before? Because I had not, and it's like a $35 billion company. Apparently, they make software for the cloud like everybody else in the entire world. But third quarter results beat, and they boosted their forecast. Bloomberg Intelligence said that supports their view of the long-term demand opportunity. Hers, apparently, is what it's called. I think they want to be more politically correct. Those shares absolutely soaring after they came out with earnings also that were much better than analysts had expected, and analysts were very happy about that. Yeah, up 11% there, HIMS. To 697.
All right, on the downside here, I mean, there's a couple themes out there. One is that earnings still matter. And boy, if you miss, this market's going to take you out to the woodshed and fast. I go with some industrial companies here. ADP, Air Products and Chemicals, APD is the ticker. Some bad results there. Revenues missed. Costs are higher, margins are down. That stock down more than 12% today. And then another stalwart of the industrial might of the U.S., Emerson Electric, weaker than expected results. Had some analyst downgrades of the stock, and that stock was down about 7% today. And then the other theme here is just simply energy. With oil pulling back, you got a lot of names on the energy space. Schlumberger, Marathon Oil, Halliburton, Freeport McMoran, all down pretty heavy today on the pullback in crude.
All right, let's get to the fun stuff. Let's get to the bond market because it was another interesting day, that rally extending. If you take a look across the curve, of course, you can see there at the front end, muted moves only down about, 2 basis points, pretty much unchanged when it comes to 2-year yields. Then you look out the curve, and that's where it gets exciting. 10-year yields down about 7 basis points, below 460. That bid continuing the longer you go out on duration. And it's going to be interesting to see how the rest of this week goes. Of course, we got a 3-year auction, I believe, today. It was pretty mild, but Scarlett and I were talking about this a little bit earlier. We have 10-year and we have 30-year bonds being auctioned off later in the week. There's still a lot of concern over who is stepping into the long end. Where is that demand coming from? Of course, as Treasury continues to boost its issuance, maybe by not as much as expected, but still, guys, I mean, there are a lot of bonds coming to the market.
Everyone get ready for and make some room in your portfolio. Let's break down some earnings. You have Gilead Sciences, the drug maker, reporting results. Third quarter beating analyst estimates. Adjusted EPS $2.29. Analysts were looking for $1.92. Revenue in the period $7.05 billion. Analysts were looking for $6.8 billion. So clear beat there. And Gilead raises its forecast as well. So the outlook is better than expected. And as a result, you are looking at the stock moving up slightly in after-hours trade, 1.7% higher. Gilead also maintaining its quarterly dividend at 75 cents a share.
All right, I'm looking at Rivian here. The company says that it has some, I guess, better news than anticipated. For example, the adjusted loss per share, we were looking for $1.32. They're only going to lose $1.19. They also said that they expect an EBITDA loss for the full year of $4 billion rather than the $4.2 billion that they had previously seen. And they're going to produce more vehicles than they previously expected to, although not by much. They were going to produce 52,000 vehicles a year. Now they say 54,000 vehicles in this year. And that's really the heart of the problem for Rivian, right? You can't get to scale when you're only making 54,000 vehicles a year. It's just tough. And they say they're no longer subject to an Amazon exclusivity deal. I saw my first one of those recently because they make big, electric delivery trucks for Amazon, but also not very many.
So that kind of goes to the EV story in general. Are we at a little bit of a flipping point, Matt, where it's maybe the demand isn't what we initially thought?
I mean, I think Rivian's a great example for that question because we always talk about the fact that early adopters got their EVs already, right? And rich people who want everyone on the block to know they're against climate change too got EVs already as their third car. So that market is saturated. Now you need people who just want to buy cars. And it's unlikely that one of those people is going to also want to shell out $95,000 for an 850 horsepower Rivian.
Especially if they don't have a charger in their garage and they have to go look, on the street or in parking lots for that.
Range anxiety is real, but Matt, you know the competitive landscape better than most. You think about some of these EV upstarts. It's not just Tesla that they're going up against. I mean, you have a lot of the traditional automakers coming out with their own EV strategies. Where does that leave a Rivian? Where does that leave a Lucid, for example?
Okay, Lucid far away, right? Rivian, I thought, was going to be a real contender because R.J. Scaringe took a decade to set this company up. I thought, all right, he's taking his time, he's being meticulous. But in terms of, the incumbents, Paul and I were talking about this earlier, they're making something different. Tesla and Rivian and Lucid, they're making luxury products or super lightweight vehicles for very futuristic people. General Motors and Ford, they're just making cars that happen to be powered by electricity, and the consumer doesn't care, especially if you're going to charge $10,000 or $20,000 more, and there's nowhere to charge it. And even if there is, it's going to take you an hour.
Yeah, that's the part that gets me, right? Filling up a gas tank takes 5 minutes, whereas sitting there in your car, otherwise you're charged if you don't do it. If you leave the car, that's kind of painful in this economy.
Also, I forget to charge my phone all the time. I can't remember. In terms of having to remember to charge my car, I could see it just turning into a disaster. But guys, we got to go. That does it for now for our cross-platform coverage of the market close on Bloomberg Television, Radio, and YouTube. I'm sure you guys will have a great rest of the program. And just a reminder, of course, Bloomberg Business Week now on Bloomberg Originals. We'll be back tomorrow, same time, same place.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
All right, Matt Miller, Paul Sweeney live here in our Bloomberg Interactive Broker studio. We're streaming live on that internet thing, youtube.com. Go over there and search Bloomberg Radio, and you'll find us there. Let's talk alternative investments. We're talking hedge funds, private equity, private credit, my new favorite area, which is going to explode potentially. Chris Heller joins us. He's a co-founder of Cordillera Investment Partners. Chris, thanks so much for joining us in studio here. We appreciate that. What do you guys, how do you focus on the alternative space at your firm?
Yeah, great question. Thanks for having me. I really appreciate it, guys. So at Cordillera, I think of us as alternative. So certainly the alternative space has been around for quite some time, private equity, real estate, natural resources, et cetera. And we really view what we do at Cordillera as going back to the basics of finding alternatives 20 years ago, right? Those asset classes were alternative in the late 80s, early 90s, but now there's a lot of capital that has flowed into those spaces. So we are about finding the next new thing. So the original promise of alternative investments, which is be early to an asset or an idea. And by being early to that, you can extract outsized returns. And then secondly, non-correlation. So finding things that zig when other things zag. So the assets that we invest in, the companies that we invest in should have cash flow streams that do something totally different. If you told me what the S&P 500 did today, it will say nothing about what the things that we invest in.
Can hedge funds still do that? Do hedge funds hedge?
Great question. The good ones do. The good ones do, and they get paid for it. And I think the one of the issues with that asset class is there's a lot of people out there with sort of long-only equity beta that are charging fees that they probably shouldn't. 2 and 20 is expensive to get long-only equity beta.
And they're in a herd, right? They're all doing the same thing
correct.
all the time.
I mean, that's really why we do what we do, mainly because we're not smart enough to compete with the entire herd, right? We took a step back and said, look, if we can go where nobody else is, we're kind of smart enough to compete against people where there's nothing there. I don't know how every day you can walk into the office and try to outsmart the entire world who's trying to pick stocks. It's tough.
That's what I meant. That's why I left the hedge fund business in '96. I said that long short equity game, done. Can't do it. And I thought I had the coolest idea. I went to the meeting and there were like 20 guys, all of whom I knew there in the room. So it wasn't so good.
Dude, you should have gotten into private credit. Private credit is what I meant to say. So let's put to Chris, because you said it's going to explode, and I know why you said that.
I'm a little concerned about
So Paul's concerned, and I get this, that so much money is in private credit, and they're doing so many deals that banks could have done, and it looks like shadow banking, but there's not the kind of regulation that may be necessary. Are you worried about that as well?
Look, I do think private credit has a space. There's a reason for it. There are certain companies, certain assets that don't get banked by the banking sector, and there's a reason for private credit. Our issue, and the reason that we think differently about private credit, is that it's highly correlated with stocks, right? If you look at it, I think people think they're getting diversification by having a portfolio of stocks, a portfolio of private credit, and those are totally different. The problem is they behave very similarly. You don't really have, in a lot of cases, the equity cushion that you think you have. So we go through another 2008, I think you're going to be in trouble in both. And I think the facade of diversification is what's scary to me about private credit.
One of the areas that I thought was off the beaten path, alternative was securitizing music royalties, and then boy, that exploded. And now every 70 to 80-year-old rocker is cashing out. Was that an area that you looked at, and what are some other areas that you think are kind of alternative to in the alternative
it's
space?
a really, really good question, and you're exactly right? The ethos, our entire sort of raison d'etre of being at Cordillera is to find things early, and then sometimes the rest of the world finds it, we have to move on. And music publishing is a really, really good example of that. So we started investing in that space in 2015. We exited 2019 really as the same thing, as it was said, as the world finds things and they bid up pricing, the ex-ante expected returns are just lower. And so we try to move on when the world finds them. There are other things, litigation finance is another good example of those, right? Where we were early to that. We were able to get some decent returns out of it, and then the world found it, and we've kind of moved on. And so that's part of what we do at Cordillera. We are finding new things. Some things we're moving on.
All right, I got to call BS on this one. Whiskey barrels?
I was just going to ask about that, and I hadn't even seen the notes. No, I do see the notes. But
Yeah, whiskey. I mean, I think that's legit. Wine. Yeah, I have a friend who is now. He was on the street in a regular job at like Mother Merrill, and now he's doing wine as an alternative investment. Really? They do the storage of it and stuff. But I think it's really interesting. I just had David Duncan on my television show today from Silver Oak. If you want a good bottle of wine,
Nice. Yep. Look, we love the whiskey. We've been doing and investing in whiskey for 4 years. We do not do the branded side. So we're not out there trying to predict what the next brand is going to be. We really own the feedstock to the brand. So we own the barrels of whiskey. The interesting thing about whiskey that's different than most spirits is that it has to be aged, right? When you first distill whiskey, it looks like vodka. It's clear. What imparts the flavor is the thyme and the wood. And so we really buy new fill whiskey, we age it for 4 years, and then we sell it back to the brands.
So wait a second. So like Pappy Van Winkle, right?
Yep.
Which is delicious bourbon.
It's delicious.
Do they not put all their own bourbon into their own barrels and then hold it and then sell it to me themselves? Or
Great question. Yeah. So there are some, Pappy, which is distilled at Buffalo Trace, that actually distill themselves. The big vertically integrated Jim Beam, Jack Daniels that you know of, they do everything.
Yeah.
Most of the craft brand space that you look at, most of what you've drank on the shelf, Bulleit, Templeton, High West, those are, the industry has totally changed, and there are what are called white label contract distillers, that they distill it, we age it, and then we sell it to the brands who use that contract distilled juice.
I did not know that.
There's so many things I don't know.
And I've been a pretty big drinker of Bulleit.
You've been paying attention to this
decade.
Bulleit now has their own distillery.
I also like Colonel Taylor, just for the record.
As we get on there.
Yeah.
What's something that you guys are looking at that hasn't been discovered yet? Like, what do you think you're going to be early on? What's the next thing that? I mean, you don't have to tell us like exactly what it is, but just kind of like I don't know. You had boat marinas on there. I don't know.
Yeah. We're doing a lot of things right now in and around sports. So obviously sports have been discovered in owning franchises, but monetizing media rights around sports. So instead of, hey, you owe $500,000 when you graduate from college, hey, why don't I give you enough capital for your education, and then you owe me some percentage of your income over time. Same with an athlete. If you're in the NFL, what if I lent you $5 million? I think you're going to make $50 million over the course of your career, and in return, we'll get 5%, 10% of your
How do you
earnings.
distribute that product or service?
Yeah,
How do you identify the student or the athlete? The athlete's, I guess, easy, but...
You've just hit on the reason why we haven't done it yet, right?
Okay.
We think it's a great space. Everything we invest in, we need a management team and an operating team. And in this space, the income share agreement space, it is tough to find the right operating team. There's two pieces to this. There is a quant piece. You have to be able to predict what a group of people will make in their career. That's a quantitative problem. Then there's a human aspect to this, which is then how do you get in front of them, and if in the sports side, an agent, a business manager, et cetera, to talk to them about this deal. And so you kind of need to put both of those together, and that's a challenge.
And then you syndicate that?
Well, in the version of what we would do, our fund would be the one funding that.
Interesting. Fascinating stuff.
Yeah.
Yeah. So much for just better than selling stocks and bonds all day. This is interesting. Chris Heller, thanks so much for joining us. Chris Heller is the co-founder of Cordillera.
The two L's together make a Y.
I got a 5 on my AP Spanish test.
Okay, well, I'm married to a Spaniard.
Yeah, I'm married. You can't speak a lick after that. That's but one of the many things wrong with our country. So, Chris, thanks so much for joining here. Talking about the alternative investment space, so lots of opportunities there. There's some pretty decent opportunities in just the stock market today, up 0.3 of 1%. Yields coming in
7 days in a row, buddy.
Yep, we'll take that. Yields down 7 basis points on your 10-year, 4.57. And we're calling out oil. We all need oil. Down 4.2%. WTI crude oil, 77.42 on a barrel of that stuff. A little more coming up. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg. eBay down 5% after hours. eBay has issued a bleak revenue outlook for the busy holiday quarter, suggesting the company continues to struggle as it loses shoppers to larger rivals such as Amazon and Walmart. Again, after hours, eBay shares, they're down by 5%. Also reporting earnings after the close of trading, Robinhood, it reported net revenue for the third quarter that missed the average analyst estimate. Robinhood shares after hours there are now lower by 6.8%. 7 in a row for the S&P 500 index, up 12 points, ending today's session at 4378, up by about 0.4%. A rally in big tech drove stocks to their longest winning streak in 2 years. The Dow up 56, up 0.2%. NASDAQ up 121 points today, up 0.9%. It was, however, a down day for the Russell 2000 index of small cap shares. The Russell 2000 down today by about 0.3%. 10-year yield 4.56%, with a 2-year 4.90%. Spot gold down $9 the ounce to $19.68, down 0.5%. And West Texas Intermediate crude dropped 4.2%, $77.45 per barrel of WTI. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Matt Miller, Paul Sweeney, sitting in for Carol Master and Tim Stenovic here at Bloomberg Business Week. And it is time for Plugged In on Bloomberg Business Week, your weekly look at EVs, brought to you by Audi. Don't let someone else drive off in the Audi model you've always wanted. Visit your local Tri-State Audi dealer. Get behind the wheel of yours today, or visit AudiOffers.com for more information. Let's get right to our next guest here. Daniel Burrell. He's the CEO of RE Automotive. It trades on NASDAQ, REE. He joins us, I believe, from Israel. Daniel, thank you so much for joining us here. Tell us about what you folks are doing at RE Automotive. What's your play here in the EV space?
Thanks for having me, of course. So we're an OEM with a very unique technology of by-wire electric trucks. We're focusing the mid-size commercial segment. We have a unique technology that allows us to incorporate, state-of-the-art technology in terms of downtime, maneuverability, and of course, total cost of ownership in a way that have yet been to the market. That's basically it.
So what does the vehicle look like? Who's going to buy it? And is it cool?
Oh, yes, it is cool. Commercial trucks up until quite recently have not been that cool, I think. But I think
in my head, I get a picture of a white van, and I feel like there's almost nothing worse than a white van on the road.
That's a fair point. But speaking for the white vans out there, they do have better thermal resistance to sun, right? And that point. But basically, we sell trucks to fleets in the U.S., a very large and growing segment of the market where a lot of the corporation and fleets in the U.S. have pledged significant targets for carbon neutrality and electrification in the past few years. And I think now is the time that we see that coming into fruition.
So at this point of your evolution here, young company, I mean, who's a typical customer for you as you think about growing your business?
Well, first of all, more than 70% of the trucks in classes 3 to 5 in the U.S., mid-size, are actually sold through dealers in the U.S. So we have a network of dealers in the U.S., a very bespoke network of dealers that cover the whole U.S. and parts of Canada. We have 16 dealers that we've announced recently and 3 fleets. Those dealers serve basically most of the fleets you see in the U.S. And we sell through those dealers to the fleets.
And I guess you've got batteries that are powering these. Are they your own batteries? Do you buy them from another company? How's that work?
Yeah, so our motto is that we complete, we don't compete. And this is why we have been around for the past 10 years. The crown jewel, if you like, of our technology is what we call the corner. So everything that makes the car go, the motor, the steering, the braking, all those are packed in the corners of the vehicle, essentially around the wheel. And we take 4 of those and we put them basically anywhere you want in space and build a truck around them. So we can have a very flat and very, very modular chassis to build upon. And we use, we are power agnostic, although we're using batteries by Microvast, which have great technology.
What do you mean power agnostic? You mean you could use other kinds of drivetrains as well?
Yes, we can. Yes, we can use batteries, we can use fuel cells, we can use different types of batteries. I think when you bring new technology to the market, you want to make sure that you have as little limitation as possible going forward, right? So as you scale up and as technology moves forward, you want to be able to be agnostic to many constraints that currently are in the market.
Hey, Daniel, we've recently heard from a lot of the legacy automakers that maybe the demand, ultimate demand for EVs, at least for right now, is maybe a little bit less than they had anticipated. Are commercial EV companies seeing the same trend?
Actually, no. We're actually seeing a much stronger demand and a growing demand in the commercial segment. I think for 3 main reasons. One is that the commercial segment, especially the mid-duty segment, has not been electrified in scale yet. So there's not been saturation at all, almost, because there has been a lack in demand or product readiness, if you'd like. And we see a very strong, demand from the market. We recently doubled our order book value just in 2 months. And second, we see that the charging infrastructure and availability of power has significantly improved in the US. That allows to deploy more and more commercial trucks, right? Because if you think about it, a commercial truck usually would not be queuing in a, public charging station waiting, right, in line to queue. So you have to look at the bottleneck of also charging infrastructure and maintenance, which are all quite advancing now in that segment in the US.
So it's a very different market, essentially, than, yes, the personal. Vehicle market. And what kind of growth are you seeing, like at your company and in the industry?
Well, we see very strong demand from large fleets. And
can you quantify it?
Yes, of course. So you should look at it, in a way that we take very close, relationship with those fleets. We look at them as design partners. We are more of address that and provide them with a truck that they want to buy. Then about 1.5 million units a year in the whole US for the whole segment, right? So a scale up of a few thousand or a few tens of thousands is massive.
I'm just seeing that your order book has doubled to $40 million, if my numbers are correct. Do you expect to be able to continue on that trajectory? It seems fast.
First of all, thank you. Yes. It is, listen, it is very, very easy to lose money in the automotive business, especially when, you're ramping up and building a field of dreams. And as we've all seen, many companies go bankrupt, right? Trying to cross the production hell desert. What we're doing is that we've built a very modular capacity that allows us to increase our capacity as we grow our order book. And we're building to order. We're not building for inventory. So we see a strong demand. We're able to meet that demand, but it's also very important to scale up responsibly, right? To avoid unnecessary recalls or inadequate product launches.
So just have to ask you, Danielle, how is the events that are happening in Israel over the past month, how are they impacting your company?
The war is affecting us all, right? Especially those that are in Israel. And some of our employees have been called to service. And those that have not are supporting our teams and fellow countrymen, of course. I think that in these times, it's my responsibility to steady the ship, even in choppy waters. And we're committed to deliver no matter what. By the way, not only for our shareholders, but also for ourselves. And as believed, the rest of the Israeli tech company communities. And I think specifically for we're built in a way that most of our employees are actually outside of Israel. Our production mainly is in England and the US.
Okay.
Yeah.
All right, Danielle, thanks very much for taking the time. I really appreciate it. Danielle Burrell, he is CEO of Automotive. Right now, let's head down to Washington, D.C., World and National News with Nancy Lyons.
Thanks, Paul. Today marks 1 month since Hamas launched a surprise attack on Israel. Israelis sang the national anthem in Tel Aviv to mark the moment. National Security Council spokesman John Kirby addressed the milestone while briefing reporters this afternoon.
1 month in, it's good for everybody to take a knee, take a pause, and remember the scope of the suffering here and the terrible images many of us have seen coming out of both Israel and Gaza.
Kirby says at least 400 U.S. citizens and their families have made it out of Gaza, with 96 exiting in the last 24 hours. He also said nearly 600 trucks filled with humanitarian aid have made it through the Rafah border crossing since the fighting began, but he describes that as just a trickle. The Supreme Court is considering a case centered on a gun law that prohibits gun ownership for those under a domestic violence restraining order. Bloomberg's Irv Chapman has more on today's arguments.
The government's lawyer, Elizabeth Perloger, supported the law denying the right to a gun to a Texas man who used a gun to threaten his girlfriends.
All too often, the only difference between a battered woman and a dead woman is the presence of a gun.
Amarillo, Texas lawyer Michael Wright said domestic violence restraining orders are too easy to get.
A one-sided proceeding that is short, a complete proxy for a total denial of a fundamental and individual constitutional right.
History and tradition was cited by both in support of their positions. In Washington, Irv Chapman, Bloomberg Radio.
U.S. News and World Report is out with its rankings of best places to retire. Harrisburg, Pennsylvania tops the list. The other cities in the top 5 are also in Pennsylvania: Reading, Lancaster, Scranton, and Allentown. The magazine cites affordability as the most important thing for retirees right now. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:40 on Wall Street. We do check markets all day long at Bloomberg. eBay after earnings now down by 5.5%. eBay issuing a bleak revenue outlook for the busy holiday quarter. Robinhood market shares are trading lower after the firm reported net revenue for the third quarter that missed the average analyst estimate. Robinhood now $43.78, higher by 0.3%. Dow Jones Industrial Average up 56, a gain there of 0.2%. The Nasdaq Composite Index was up 121 points, up 0.9, but small cap shares moved lower with the Russell 2000 down today by 0.3%. 10-year yield 4.56% with a 2-year at 4.91%. Nick Venditti is senior fixed income portfolio manager at Allspring Global Investments, and right here on Bloomberg Business Week, he said he thinks we have seen the high for 10-year yields.
I do think that we are probably seeing a crest in rates. You know, they hit 5% on the 10-year and retreated back. Maybe they go a little bit higher for points in time, but ultimately I think we've seen the peak.
Spot gold down $9 the ounce to $19.68 the ounce on spot gold, and West Texas Intermediate crude cannot ignore that move today, down 4.5%. WTI 77.13 the barrel. Again, recapping stocks higher, S&P up 12, a gain there of 0.3%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thanks very much. Charlie Pellet there with your Business Flash. Matt Miller and Paul Sweeney in the studio for Carol and Tim, who are on vacation somewhere. Sure. But we're happy to be here, and we have a great guest, Vin Vong, here in the studio with us. He is currently a CEO of Garrison Fathom. He was the CEO before that of Fathom Holdings and participated in some public-private partnerships, and also was a bidder in an auction for Remington Arms Company at a pretty young age. Cool. After he played football at Penn State and did his MBA at Harvard. So he knows a thing or two about finance. Vin, thanks for coming to the studio. We just saw the end, I think, for now, of the trial of Sam Bankman-Fried after his crypto empire collapsed. And you actually met Sam Bankman-Fried. He was looking for investors and talked to you. You've met a number of the biggest players in crypto. Although you're a skeptic, they still let you in. What do you think about how this trial ended up and what we're going to see next?
I think the trial is, in my opinion, fantastic. I think it actually finally exposed crypto for what it is, which is a Ponzi scheme. I've said that for many years now, and I continue to think that way. I think what's going to lead now is finally the law enforcement and, for example, like the DOJ is finally now aware of what's happening in the crypto space, better knowledge. And I think it's going to really bring up a lot more trials and cases like SBF. I think that's just the tip of the iceberg. I think because he was the biggest name out there, and that's going to raise a lot of red flags and put a lot of pressure on DOJ to find more. Because I've said it before, I mean, a lot of these crypto projects, they're all practically Ponzi schemes.
All right, why do you say, that's a strong statement, why do you say Ponzi
It is, I feel like we need to push back on that one a little bit, like legally.
Well, just, so
and it's such a broad array of some are businesses, some are simply blockchains. Why do you say that?
Well, I say that because we've had so many of these meetings with a lot of these leaders, right, in the crypto projects. If you look at the fundamentals of what they are, all they're doing is literally moving money from one investor to another behind the scenes. They're not providing any real value. Now, I give blockchain a little bit of credit, like Ethereum. They are providing a utility to host a lot of these projects, a lot of these tokens. But other than that, it's a barbaric system. I mean, if you look at it, they push for innovation, they push for moving forward, decentralization. But if you look at that, it's pushing us back centuries. I mean, it's a barbaric system, it's a barter system.
How is it pushing us back centuries? How is that?
Because if you look at each of these projects and what they're doing with the tokens, they are practically creating makeup tokens, right? Which is not backed with anything other than hyped up marketing. And they're trading with one another and bartering one another. So it's taking us back in time just with modern technology and bartering. That's all really what it is.
So, but you're talking about also when you say moving cash from one investor to another, kind of the commingling of funds that looks like we saw at FTX. Do you think the same thing is happening at other big crypto exchanges like Binance, like Coinbase?
Oh, most of them, yeah, absolutely. Binance, Coinbase, they all are doing that. Now, if you look at how these exchanges function, right?
Because I would say if Brian Armstrong were here, he would say we are not doing that.
Oh, I would love to talk to Brian more about this. I mean, if you look at the fundamentals of what Binance and Coinbase do, the reason why they have a little bit leeway is because all they're doing is they're harboring a lot of these, again, Ponzi scheme type projects. Unlike NASDAQ and the New York Stock Exchange, right, they actually do really intense audits and intense reviews of all the businesses that they host and they exchange, right? If you look at Binance, you look at Coinbase and these guys, it's not very, very in-depth. And a lot of these tokens that are on there, or these crypto companies or businesses, whatever you want to call them, there's not much there. They're not actual business.
It does seem like Binance, because they are listed on SEC filings as surveillance partners for some of these ETFs, for example.
Right.
It does seem like Coinbase is a little bit more trusted and a lot more transparent than Binance or FTX.
I mean, I think so. I mean, if you look at their transparency, they're doing what the minimum is for SEC to make them happy. But if you look at their filings, they're so delayed and it's so very generic. You look at the actual underlying filings, there's so many questions from the SEC. But real quick, I just want to take another real quick step back on why this does not work, right? The decentralization, what crypto is doing. If you look at how they operate, it's really ideal for money laundering and crime because it's so complex. The reason why we have such a great system currently now, yes, it's a little bit, there's some little abuse in our traditional system.
I was going to say, don't you think the U.S. dollar is pretty ideal for money laundering? I mean, if you had to guess a percentage of currency used in crimes, don't you think the dollar would have like a very high percentage?
Yeah, but that's just, if you look at that, that's just the dollar from a traditional standpoint. But if you look at what crypto is doing, they're just, a lot of these founders tell me, they're like the dollar, all they're doing is making it more innovative and more efficient and more transparent.
But it's also very trackable. I mean, I think about Bitcoin mostly, right? I think mostly about Bitcoin.
Yeah, but real quick, Venmo, if you look at bank accounts, you look at banking transactions, it's all there. If you look at how these ledgers work with crypto, it's not really that transparent. All of this is a bunch of numbers and when the transaction
But there's no way for me to put a bunch of Bitcoin into a duffel bag and give it to you, right? I can do that with dollars.
It's practically the same.
But Bitcoin's still on the blockchain. I can see where it goes.
Yeah, but it's practically the same because all of this is a bunch of ledgers. I mean, all of us right here can have 10 different ledgers, right? And I can put 1 billion Bitcoin into one ledger and then just go away. That's practically a duffel bag, that ledger is a duffel bag. And the thing is, there's so many of these crypto projects, it's so complex. They keep trying to say they're trying to help regular people, but they're not because all they do is make it more complex. What we truly need to do is actually focus on real financial innovation. There has been true financial innovation of a product. I'm not saying technology and using electronic, like being able to Venmo or use Robinhood to trade. I'm talking about product innovation like ETFs, right, which was created in 1993. What we truly need is new innovations that continue to advance finance and society forward. And I'm happy to say we're doing that. We're going to be launching this here real soon, which we'll announce later. But that's what we need, not crypto. Crypto is just harboring more crime. It's harboring more complex ways of trying to be cool and all those sorts of things. But it doesn't really provide any value.
All right, good stuff. Vin, thanks so much for joining us. Vin Vong, he is the CEO of Garrison Fathom and Vong Holdings. Talk a little bit about crypto. I'm going to call it out, Matt, because it trades all the time. Bitcoin, it is up 1.4% here today, $505, or trading at 35,535. So it continues to hold above that 30,000 level. But of course, a lot of volatility there on the Bitcoiners. I call it out because Tom Keene doesn't really want to talk
Bit dog, he calls it.
I know, that's not very nice.
But it's still trading for 35 times more than it was when I first started covering it.
your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. ExxonMobil has elected Dina Powell McCormick, a former advisor to President Trump, to its board of directors. Powell McCormick was one of the few Bush administration officials to win a role in the Trump administration, where she served as a deputy national security advisor until 2018. She spent 16 years at Goldman Sachs. ExxonMobil down today by 1.6%. Oil stocks lower along with the price of oil today. West Texas Intermediate crude dropped 4.5%. Uber gave a mixed picture of its business, showing a second consecutive profitable quarter and an increase in demand for rides and delivery, but also slowing revenue growth. CEO Dara Khosrowshahi was on Bloomberg Television this morning talking about the quarter and the outlook specifically for the company's branded advertising business.
You might see those branded advertisements when you're using your Uber app and you're waiting for your car. We might show you an ad from an Apple or a credit card company or an upcoming movie. Our demographic consumer tends to be urban, tends to be very high income, and we have very big hopes for our branded advertising business as well.
And Uber shares rallied today by 3.7%. Its crosstown San Francisco rival Lyft gained 2.9%. Apple has hit pause on development of next year's software updates for the iPhone, iPad, Mac, and other devices so it can root out glitches in the code. And those are some of the top company stories at this hour. And this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
All right, Matt Miller and Paul Sweeney sitting in for Carol and Tim here. Bloomberg Business Week on a day we had a little bit of a lift to the market. S&P ended up about 0.3%, a little bit better on NASDAQ, up 0.9%. Lots of earnings out there post-close and coming out the rest of this week, so we'll keep on top of those. Right now, let's head down to Washington, D.C. World and National News with Nancy Lyons.
Thanks, Paul. It's Election Day for many voters. Ohio is the latest flashpoint in the nation's battle over abortion access since the U.S. Supreme Court overturned a constitutional right to the procedure last year. Voters in Ohio are deciding whether to pass a constitutional amendment guaranteeing an individual's right to abortion and other forms of reproductive health care. Bloomberg's Anne-Marie Hordern says it could be a sign of where the country is heading.
It's going to be interesting to see the results of this and what potentially they can tell us in terms of reading the tea leaves about next year's general election.
Bloomberg's Anne-Marie Hordern. Nationwide polling shows about 2/3 of Americans say abortion should generally be legal in the earliest stages of pregnancy, a sentiment that has been underscored in half a dozen states since the Supreme Court's decision. Well, a month into the Israel-Hamas war, Israel says its troops are fighting inside Gaza City as they move toward its heart from the north and south. One officials say they're trying to take out Hamas tunnels as they close in on the city's center. President Biden has reportedly been briefed on what his advisors see as a Chinese plan to build a military facility in the Gulf nation of Oman. Bloomberg News national security correspondent Nick Wadham says this could be just the start of a new push by China.
There's a lot of talk that they want to do this in many other countries, the United Arab Emirates, but also in Asia, and that would sort of be part of a broader push by the military to start expanding and basing itself in other countries around the world, in some ways like the United States does to a much greater degree.
Bloomberg's Nick Wadham's in Washington. Oman is of strategic interest given its proximity to the Strait of Hormuz, which is one of the most vital shipping lanes for oil and liquefied natural gas. President Biden, meanwhile, is slated to meet with Chinese President Xi Jinping next week in San Francisco. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. Now back to you, Paul and Matt.
All right, Nancy Lyons, thank you so much. We appreciate that. Rivian.
Yeah, Rivian came out with earnings earlier, I should say losses earlier today. They lost $1.19 a share on an adjusted basis last quarter, which is better than the $1.32 loss per share that we were anticipating after a survey of analysts. But the interesting thing is that they have ended their exclusivity agreement with Amazon. So back in 2019, Rivian made a big announcement. They were going to sell 100,000 electric vans to Amazon and would be in an exclusive deal with Amazon, so not allowed to sell those vans to others. until 4 years had passed. Now we're, I guess, at that point, or about to be at that point. Plus, Amazon happens to be Rivian's biggest shareholder, right? They own almost 17% of the company. So Rivian's going to be able to sell vans to other customers, as well as the midsize pickup and SUV that they famously make. But they're just not making that many, and that's the problem.
So, I mean, you're the car guy here. I mean, is the expectation in the auto industry that Rivian is one of those companies that can make it, one of these EV companies that